Yeah, did you realize? Champion. Bro, this nigga.
How is everyone doing today?
Amazing.
Can everyone hear me?
Yes.
Or is it me? Oh, it's my computer. I can't hear.
Yes.
Okay. let me-
Yes.
There we go. How's everyone doing today?
Wonderful.
Blessed.
Good
How
stuff.
are you?
Yes.
What's up?
Good.
Awesome. I'm doing good.
Good.
Hello.
So let me ask you this. Do you guys see this on the screen right now?
Yes.
You
Yes.
see how much you see that profit and loss of $1,100? That P&L day right here, $1,100.
Can't hear nothing.
Point at it again.
Let me get myself
Get the
together.
headers.
Yeah, right there, right here. This $1,100 right here. P&L day at the bottom. Y'all see that?
Okay.
Yeah.
Yes. Yes. Yes.
Okay.
Yes.
So right
Say
here,
that again.
right here, this is $1,100 today. Okay, that's how much profit this this was a live trade back in January, right? Or this is on demand feature. So right now it is 9:44, for example, and the market opened at 9:30. This person bought one contract of Tesla, and they're at $1,100 for the day profit so far in 15 minutes.
That's what I'm talking about.
So what you're seeing is this stuff is not far-fetched. First and foremost, it's not far-fetched. People do this every day, and I'm one of them, right? I'm turning to one of them, right? And only thing you got to do is what you see right here. You see this green and this yellow line. This is what we about to discuss today. This green and yellow line right here. This is going to be your baby. You're gonna follow everywhere she go. You're gonna go, okay? So let's give everybody like 10 more minutes to join in. We're gonna get 5 more minutes. We're gonna start at 8:10. We're gonna start. So I'm gonna take you back. I'm gonna let you just watch the screen a little bit and just look at this profit and loss, either go up or down, okay? So be back at 5 minutes.
Just wanted to show you because he said he was giving everybody $5 to log in. You hear people in the background. See?
All right. All right. All right. Okay, so we're gonna go ahead and get started. JT, are you on, JT? Let me make sure. Let me unmute. JT, are you on?
I'm on.
All right, perfect, 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 perfect. And I'm taking, if you can, if everybody can hear me, type yes in the chat. If you can hear me, type yes in the chat. All right, perfect, beautiful, beautiful, beautiful. Okay, hopefully everyone received their cash out from their last class. And also, if you received the day one replay and was able to view it, type in yes. Okay. Candace, did you send me your cash out? Okay. So two things. So if you did not receive the day one class, send me an email and I'll send it over to you. And Candace, I didn't view it, but received. Okay. And Candace, if you Candace Jackson, make sure you send me your cash out. That's the one I did not have. I knew I was missing one. Okay. All right. So hopefully everyone yesterday wasn't too overwhelming and you kind of have a good understanding of, support and resistance. But what we're going to do is going to do a quick recap of support and resistance to kind of just tie in some things. Also, we're going to jump into chapter 2. Okay. Chapter 2 of your book. All right. So as of right now, what I want you to do is I want you to go back to chapter 1, support and resistance. I want you to jot a few things down that I'm going to tell you, and we're going to jump back into that for a couple minutes, and then we're going to go back into one sec. All right, yep, got it. Yep, you can what was that? What was that in my mind? I got thrown off. Let's see. I'm doing too many things at one time. Yes, I want a few things I want you to write down related to support and resistance. Okay. So let me share my screen and we can get started. Yes, I'm going to send the PowerPoint out to you tonight. You will receive the PowerPoint deck tonight. That's what was going on. I got too many. I think it's once screens up. There we go. Okay. All right. Okay. Now, support and resistance. Two things I want you to write down. Let's see. All right. So for swing trades, okay, when it comes to support and resistance, okay. Now keep in mind with support and resistance, the first thing you got to understand is the reason why we're doing support and resistance. We're doing support and resistance so we can actually build our house. Okay. So when I say build our house, I mean build our framework. We have our ceiling and we have our floor. Okay. So the first thing that we do, we always go to the highest and the lowest, right? That's kind of how I start off doing mine, the highest and the lowest, and that builds my ceiling and that builds my foundation. All right. The next thing you want to do, if you're swing trading, you want to use farther out time frames. Okay. Farther out time frames. And remember, when we're talking about time frames, we're talking about this right here. See this 2 minutes where each candlestick is farther out. So right now, each candlestick is 2 minutes. But when you're doing swing trading, you want your candlesticks to be, let's say you start at the 1 week okay? And you go from, so put this down in the book. Click join audio if you can't hear, yes, okay. So you wanna do 1 week and draw your lines. Then you wanna go to the 1 day, draw your lines, and then you wanna go to the 4 hour and draw your lines. And I'm gonna show you that right now, okay? So let's start off with the 1 week. So you see right here, it says 3Y, which equals 3 years, and the W equals week, okay? And what this does for you is it gives you each candlestick equals 1 week. Each candlestick equals 1 week, okay? So we're doing this so we can see the price action for that 1 week and see, okay, what was the highest point? What was the lowest point? And that's where we're gonna draw our ceiling at. And like JT said, she kind of starts over here to the right. This is the most important time frame as of right now. So we're back right here. If I'm looking right here, look at the bottom, it says 12/28. That means December 28th. That's how far back I am right now, okay? So first thing I see is the highest is 900.4. Yep, because it's the most recent time. Yes, not 900.4. So I'm going to draw my ceiling right there. That's the top of my house, all right? Nothing's been above that point, okay? And now I'm going to come down here and see what is another level that was hit multiple times, you know, within the past 3 to 4 months, okay? So now, the reason why I say 3 to 4 months, 3 to 4 months, 3 to 6 months, that can give us a good time frame of where the stock is actually trading right now. Because if it's trading at 900, 700, and 800 right now, we don't want to go back to when it was at 200. That's not helping us out any. We want to be close to the same time frame or the same price levels, okay? So we see right here, do I need to zoom in or you can see my screen? Good, okay. I'll zoom in a tad bit, gotcha. Here we go. Now right here. Okay, so we see right here, we got the 900 level. Then we come down here, we see this level was hit. It was kind of hit right here, consolidating. When we say consolidating, what I mean by consolidating, the candlesticks are staying in the same area for the most part, okay? Now keep in mind, right now we're on the 3-year, 1 week. So each candlestick is 1 week of buying and selling, okay? 1 week of buying and selling. So right here, this week, the candle, it kind of flirted around here. It bounced around here this week. It came up a tad bit, but it's still bouncing around here. It went up some, then it came back right back down to this level again, and it's consolidated right around here. So we will consider this level right here another level. Okay, does that make sense? Boom. So now that's our support exactly. So now we have our ceiling, which is the highest level. And then we go down here, it bounced off of support, went up some, came down a tad bit, went up, bounced off of support, bounced off of support, bounced off of support, bounced off of support. This is consolidating. This is all for a whole month. Okay, 1 month, 1 week, 2 weeks, 3 weeks, 4 weeks. Okay, because each candlestick equals 1 week of buying and selling. Okay, 1 week of buying and selling. And remember, the wick means at some point in time it went up that high, but it closed down here at the body. Okay, so the wick means some point in time it went up to a certain level, but it came back down, or it went down to a certain level and came back up. Okay, so when you're thinking about support and resistance, start off, if you're swing trading, start off at the 3-year 3Y semicolon W. Okay, 3Y semicolon W. That's the first level you start off with when you're doing swing trades. Okay, now the next level I go to is the 1 year. That's the 1Y 1D. 1 year, 1 day. 1 year, 1 day. And we're basically, what we're doing now is we're drilling down. Okay, we're drilling down into smaller time frames to get more support and resistance levels. Okay, so boom, 1 year, 1 day. And as you can see, my 1 year, my 3-year weeks are still there. Okay, those lines are still there. But now we're going to find some levels on the 1 year, 1 day levels that we didn't see previously. Okay, So we're going to start right here. We was at November. We're right around here, December. Okay. So let's see if we see any levels. I'm looking for levels that were hit multiple times. Okay, we're good here. This is still good up. This resistance is still good. We coming down, coming down, coming down. We bounced right here. We came up and we came back down, always here. And we came here, boom, came here. We came here for a couple days, went back up. We was here for a while and came back right here. Okay, so in my mind, I saw two levels, okay? The first level that I saw was right here. You see this level right here, this 611, okay, 611. If I zoom in on 611 right here, I see it came down here. It was a crazy drop down, boom, it bounced real big. It bounced, came up, it came back up right here, and it came all the way down to this 555 level, right? But then we came back up here, and then we came here to boom, right here. We have this 611, 612 a level hit again. And then right around here, we see it consolidating 1 day, 2 day, 3 day, 4 day. It's consolidating right there on that line. Okay. We have consolidation right there. So I will draw that as a level. And that's around the 615 level. Okay. That's the level for me. 1Y, 1D equals 1 year, 1 day. 1 year, 1 day. Okay. 1 year, 1 day. All right. So that would be a level for me because I'm looking right here. And if I go back if I go back even further, you would see right around this 615 level, 1 day consolidating, 2 days consolidating, 3 days consolidating, 4 days consolidating, 5 days, 6 days, 7 days, 8 days, 9 days. It went up, came back 10 days. It consolidated there for like 10 days on this 615 level. Okay. So that would be a level for me. Now, if I keep going over to the right, now look what I see. I see it came here, it came here, it came back here 1 day, 2 day, basically like 3 days right here, 4 days, 5 days, 6 days, and it finally went back down. So I would draw this level, and this level is the rough around 751, 750 level, right? That's the 750 level. Because it was at the 750 level right here. It played around this level again for 3 days, then 4 days. It dropped down some, then it came back up here for like 5 to 4, 5th day, 6 days, 7 day, 8 day, 9 days. It was at that same level, and it could not break that resistance. It could not go any higher than that. And then it fell back down. So now I would draw that as a level. Okay. So now this is the 1 year, 1 day. And this is for swing trades, okay? 1 year, 1 day. And it's for day trades too, but I'm talking about swing trades first. So now I have those levels drawn. I would draw one more. I would do one more time frame. And that time frame, sorry about that. That time frame is the 180 day. 180 day and 4 hour. That means it's going to go back 180 days in the past, right? It's going to give me 180 days of historical data, and it's going to give me 4 hour candlesticks. So each candlestick equals 4 hours. All right. As you can see, my lines are still drawn. If we go all the way out, you see my lines up here are still drawn. But as we drill in closer, we're getting more and more different levels that we're seeing inside. Okay. Now we can get into some more levels. So if we start right here, this is April. Let's go back a little bit. April should be April. Yeah, this should be fine. About a good 2 months back on a 4 hour. We look right here. We zoom in. We see right here. It's coming down, coming down, coming down. Boom, level hit. 1 hour, 4 hours, 8 hours, 12 hours. We got 16 hours. We got 20 hours. Another one, another one, another one. All this was just sitting here for almost 2 or 3 days. Okay. That's the 710 level. Then we come right here. If I draw the line right here, we come right here. It went up, came back down and hit that level again, went back up, came here to this level, sat here for a couple hours. Then it finally broke. It broke. Then it came back up here and tried to test that level, and it went back down. And then right here, it came back up and hit that level again and went back down. So this level right here of 710 would be another level for me, because you see right here, it's up. Let me get my drawing tool. Right here, it's operating as support, right? This level right here is operating as support, okay? But over here, and I zoom in some. But over here, it's operating as a level of resistance. Okay, you see that? You see how it right here, it came here, it went down, traded down a little bit, then boom, big boy candlestick. I don't know what happened that day, that 4 hours. But good googly move, that's a lot of money. It shot all the way up here, boom, hit resistance. Yes, these are 4 hour candlesticks. So within 4 hours, this stock did this. Whoever was in the call this day made a lot of money. Okay. So right here, boom, it shot all the way up and it hit this level of resistance. Hit this level of resistance. And then right here, it hit the level of resistance again. Overnight, hit the level of resistance again. And then it could not break that resistance level. So where did it go? It went back down. Boom, came back down. All right. Now let's see if we see any more levels. Do we see any more levels? Let's take a look right here. Let's see what happened. It came down here, jumped up, came down here again, stopped right there, went back up a little bit, came back down here again. It flirted around this area, flirted around this area, then boom, it finally broke. So this will be a level right here. And this is the 663, 665 area. It came here, boom, bounce, went up to the next resistance. It couldn't break, boom, fell back down to the floor, came back up some, then it consolidated right here for all these hours. Each candlestick is 4 hours worth of time. Each one, 4 hours of time. And then we come right here. And what do we see? It finally breaks through. A big boy candlesticks and it breaks through, right? Boom, it broke through and it started going down. Okay? So in swing trading, that's what you do on swing trading. You started that 3 year, 1 week, and you look at the you look closer to the right? You want to probably go back maybe like 3 to 4 months off of it, okay? Then you draw your lines there. You'll probably get a good 1 to 2 to 3 lines on that 3 week thing. Would you say that, JT? About 3, maybe like 3 lines, 3 support resistance levels on that one. Then you want to go to the 1 year, which takes you 1 year, give you 1 year of historical data, and it's for 1 day. Each candlestick equals 1 day, okay? Then you draw your lines from there. Then you come into the next one, which is the 180 days of historical data, and each candlestick is 4 hours, okay? Each candlestick is 4 hours. And I see one more just by looking right here, right around this area right here. It's another level, okay? That's like the 635, 630 range, all right? Okay. Boom. So that's what, and so you do that, then you do that 180 day, and then you do the 4 hour. Okay. So when you're swing trading, you will make your decision on getting into a stock or not based upon what? Based upon your levels on the 3 year, 1 week, 1 year, 1 day, and then the 6 hour, the 180 day, 4 hour. And we're gonna break that down some more in a few. Now, when you're day trading, you do the exact same thing we just did, but you take it, you dig a little bit deeper, okay? So instead of stopping right here at the 4 hour, you go all the way down and take this down to the 15 minute. Okay. So I go from the 4 hour down to the 15 minute. Boom. Hit my 15 minute. Now, this is what the 15 minute look like. We only see one line on the screen right now, right? because it's down to a 15-minute level. So we got to find some more levels, okay? So boom, the first thing I see on the screen right here, we came down here, boom, boom, boom. It's set right here for 15, 30, 45, so on, so on, so on. It came over here and set at this level. Boom, this would be a level of resistance for me, support for me. At that point in time, it was support, okay? You come over here, we see this is another, this is a resistance level, because we see that when this came down, it came, stopped right there, it came up, it went up right here, it went up some more, and it came to this level, and it didn't go past that level. Then we come over here, and boom, it came right here, went down, came right here for 15 minutes, couldn't break, 15 minutes, couldn't break, went back down, attempted it again, couldn't break, then it dropped down. So right here is a small level of support as well, right around that 604, 605. And what you will see is when you start doing your support levels, you will see that most numbers are close to a 0 or a 5 when it comes to certain stocks. It's probably like 630, 635. You may get 634. Most of the time that I round up to like 635, 630, 640 to hold numbers, okay? But then you break it down to the 15-minute level and you keep going, okay? You keep going, and we see on this is a level of support, because look, if we keep going on over, hit, could not break it. Could not break it. I hadn't even looked over there yet, but he couldn't break it, okay? That's another level. And then you take it one step further for the day trading. You go to the 5-minute, okay? Go to the 5-minute, 5-day, 5-minute, 5-day, 5-minute. So it's giving you the historical data for the past 5 days worth of 5 minutes. Each candlestick is worth 5 minutes of data, okay? And you draw these lines while you're trading, okay? So while you're trading, you say, okay, I'm trading, for example, if I'm in this day right here and I'm watching this stock, I see if this stock went right here and came down, it only has to hit that mark really one time, honestly, once or twice maybe, right? Boom, I'm drawing that as a line. Come here, boom, that's a line. When it come down here and it come down, let me zoom in. It come down, all right, boom, the stock hit right there and it came down, it hit, went down, boom, came back up, hit it again, then it kind of consolidated, then it dropped down. Like, so that's a level of support, right? Level of resistance right here for day trading, okay? For day trading. Then boom, I come back down here, it hit right here for 5 minutes, hit right here for another 5 minutes, hit right here for another 5 minutes, that's 15 minutes worth of time, boom, that's a level of support for me, okay? Because this is a day trade, so we want to know where the buyers and the sellers are today at this very moment, all right? So boom, it comes up, 5 minutes, 10 minutes, 15 minutes, 20 minutes, 25 minutes. It could not break for 25 minutes. Boom, that's a level of support for you. That's a level of resistance for you because it could not break. The thing to remember is when you're day trading, you're going to have more levels of resistance and support because you have buyers at certain levels buying and selling all day, not swing trading. They're buying in this day and selling this day as well, okay? Now look how this works. We drew this level of support. If we're day trading, we drew this level of support right here, right? Boom, we drew it right there. So this stock went up. How do you not confuse your lines? Great question. You can change the colors of your lines, okay? If you're doing when you're doing probably like your swing trade, you might want to make your swing trade lines red or something, or blue or something, right? But when you're doing your day trades, may want to make your trade your lines green. That's how you can mark it and find out, keep in mind what's what. All right. So boom, we had support here, it bounced and it went up. And then it hit our resistance, hit resistance. And once it hit resistance, where does it go? When it hits resistance, it goes back to the nearest support line. Exactly, it goes back to the floor. And what did this do? Boom, it came back to the floor. It hit the floor again, 5 minutes, 10 minutes. It's consolidated, went up a little bit, came back down 15 minutes, another 20 minutes, and then it started to go up, started to go up, started to go up. Then boom, right here. Well, not right there where I drew. Right here. All right, so then boom, right here, this candlestick. Now it went out, it bounced off of support, and now it's going to resistance. This is a 5-minute candlestick right here, okay? So that means for 5 minutes, a green candlestick always opens where? Where does a green candlestick open? At the bottom or the top? Good stuff, good stuff, good stuff. It opens at the bottom. I want to show y'all this. So that means this green candlestick opened right here. This green candlestick opened right here. Okay. It had a small little wick, so it went down a tad bit. And then it said, boom. It shot straight through resistance. So in your mind, you done got, if you're in a call, you done got happy, right? It shot straight through resistance. But then by those 5 minutes, it worked itself back down here, right here below resistance again. So honestly, it still haven't broke resistance. Remember the analogy I gave you, putting a thumbtack in your ceiling, right? We put a thumbtack in the ceiling and it's stuck up there. But then we can always pull that thumbtack out and you won't even see that hole in the ceiling really, right? You won't even see the hole. That's what happened right here, okay? But that next candlestick right here, it broke, it opened up right here on resistance, went down some, then boom, it shot up and it closed above the support level. It closed above the support level, okay? So now that resistance that we just broke through is now my what? Exactly, now it's my support. Now it's my support. So do we jump in immediately? And why do we not jump in immediately? Because there's a what? Exactly, because it's that hole right there and you need to test that new level of support, okay? Now, once we see that the level of support was tested and it was good, now we can say, okay, we want to possibly get in, okay? But keep in mind, we still have other levels here as well drawn. And that's the good thing about day trading, okay? So that's kind of how you do it when you're day trading. You draw lines as they happen, okay? Because you want to know what's going on. What are the traders thinking right now? Where are the traders putting in buy orders and sell orders at this very moment, okay? And that's how far I normally go. All right? So that's a quick overview of, a quick recap overview of support and resistance. All right, JT, we're gonna take it off mute for a second just to see if anybody have any final questions about support and resistance. Quick Q&A, for example. Any questions so far?
I think you're good. I've been answering some along the way.
Okay.
Asked, but I think you'll get, of course, you're gonna get into this. Well, what indicators can we use to determine the direction of momentum?
Okay. Yep, we about to get into that right now, actually.
All right. Someone said, with day trading, do you wait until midday to see who's buying?
Nope. So with day trading, you probably want to see about. You want to try to. You won't honestly be able to see a lot of data until probably like 15 minutes in. But that's why you have this right here. That's a great question. When day trading first start, you see the difference. You see this is gray and this is black. The gray is pre-market trading, okay? So what you want to do is if you're day trading, you always want to find your pre-market high and your pre-market low, okay? So right here, I would say my pre-market high is right here. So I would draw this as a level of and my pre-market low is right around here. Okay, that's my pre-market low. So what you're doing is you're saying, okay, The pre-market trading was in this ceiling and floor. So when the market opens, you get to see, okay, is it going to go test down? Is it going to test my ceiling for the pre-market, or is it going to test my support for the pre-market, or is it going to test my ceiling for the pre-market? Okay. And as you can see, this one right here, at opening, it came here, it tested it. The next one came and tested it, it broke through, boom. Then it came back down, hit support, and it bounced off of it and went up. Okay. No, this is not RSI. RSI is down here, right here at the bottom. And we're going to get into that too. All right.
All right.
All right. Any other questions?
Yeah. Why did you use the time frames that you use for the swing trading?
Okay, so swing trading. Most of the time when you're doing swing trading, you want to catch the trend. Okay. When we're day trading, we want to catch that quick trend. Like what's going on this next 5 minutes. But when you're swing trading, you want to catch what's going to happen closer to the end of the day. Because you know what the stock market goes up and down, up and down, up and down, up and down. But when you're swing trading, you want to say, okay, I may start at 5 and it may go to 10 and it may drop down to 2. But if it closes at 10 again, if it closes up at 12, I'm happy, right? So when you do the week, the day, and the 4-hour candlesticks, is giving you historical data over a long period of time for your candlesticks, right? You want to see what's going to happen to this trend 2, 3, 4 weeks down the road, not necessarily what's going to happen over the next 5, 10 minutes. Okay, so you make your decisions off of the week, 1 day, and the 4-hour. I normally use the 4-hour when I'm making my actual final decision, but you start drawing your lines on the week and the 1 day. And we're gonna get into that right now, honestly. Yes, so before the market opens up, I set my support and resistance based off of pre-market trading. Okay, and like I say, this great part is pre-market trading. At 4 a.m., people can start pre-market trading. And it goes from 4 p.m. to 9:29. Okay, aftermarket trading goes from 4:31 to 8 p.m. Okay. Any other question, JT?
Yeah. How does price action help predict the next support and resistance?
How does price action predict the next support and resistance? So think about this. If we have price action where we see, like, for example, the $5 thing that we use for support. If this is sitting at $5 for 5 minutes, 10 minutes, 15 minutes, 20 minutes. So it's people buying and selling, but it's averaging out at that 5-minute mark for 20, 25 minutes. That's a level of support for you. Now, if it was up here at the $10 mark and it kept consolidating around the $10 mark for 5, 10, 15, 20 minutes, and now that's a level of resistance for me. Okay. And that's how you determine, and basically that's how price action determines for support and resistance.
All right. What is the difference between the hollow candlesticks and the solid candlesticks?
There's no difference. The solid red ones just showing that just red and people are selling. And the green ones, for some reason, they got the hollowed ones there. It's no difference whatsoever.
All right. For day trades, do you wait for a couple candles to look the same to get into a trade?
We're about to get into it right now. Just think about it. Keep in mind, we're writing a book with like 4 or 5 chapters, and you want to use each chapter. Like the Bible says, you want to make every decision by 2 or 3 witnesses. So right here with trading, I use a similar method, but I make a decision based off of 3 or 4 witnesses. Okay. All right. So let's jump into chapter 2. So everybody got your book, your notebook. In your notebook, let's go to chapter 2. So write chapter 2 at the top of your page. And we're going to call this your moving averages. Moving averages. Okay. Moving averages. All right. Now the moving averages are this green line. This is your non-EMA, exponential moving average. I have this stuff in the deck, so you don't have to necessarily write everything down. but some of this stuff is in the deck, okay? The yellow line is your 21 EMA, exponential moving average, okay? This red line is your 200 exponential moving average. And what this does is it tells you the trend, the current trend that's in place right now, okay? The current trend, what's in place right now, all right? So also, with this exponential moving average, label this chapter moving averages, and then in parentheses, put in decision-making time. Decision-making time. Decision-making time. And I call it the DMT. It's DMT. So whenever you go into our group chat and you see that it says DMT, that means it's decision-making time. The green line is the number 9 EMA. The yellow line is the 21 EMA, and the red line is the 200 EMA.
Is there any way we can do that job tomorrow or no?
Okay. And like I say, this is in the deck as well. The colors of the lines are in the deck as well. So if you missed it, and somebody just put it in the chat too. I think that was JT. She just put it in the chat. All right. So now, this is the bread. This is some bread and butter right here. Okay. When you're trading, always listen to this. Put this in your chapter. Put this in your book. Put stars around it. You always follow the green line. You always follow the green line. If the green line is going up, you buy a call. If the green line is going down, you buy a put. Okay? I know this sounds simple. You follow the green line. Following this green line will make you win 7 out of 10 times. Following the green line with the other chapters that we're going to put together will make you win 7 out of 10 times. You know how many times I've lost by not following the green line because I think I'm cute and want to try to predict the future. But the green line tells you the current state and it gives you an idea of where it's going as well. Okay. Now, whenever, this is very important, whenever you see the green line, which is your non-EMA, and the yellow line, which is your 21 EMA, horizontal, right beside each other, laying on top of each other. Whenever you see that, you do not go anywhere. I don't care if the house is on fire. You take your computer and you go outside and you watch that sucker burn because that green and that yellow line are right beside each other. Okay? What that means is when the green and yellow line are on top of each other or right beside each other or coming close to each other, it's called its decision-making time. It's time for a decision to be made. Okay? Prime example, right here. Matter of fact, let me put up the deck first before we show it on the screen. I'm gonna show it to you on the deck. Okay. Where is the deck? Okay, here we go. I'm telling y'all, this part right here is like you about to be like, oh, okay. Somebody gonna see it before I even say it, but they're gonna be like, oh crap. If I know chapter 1 is my ceiling and floor, and I see chapter 2, the moving average is boom, boom, boom. If I put both of them together, it tells a story. Y'all, we're about to tell a story. We're writing a book. We're about to tell this story. And this is the beautiful part of it, okay? Right here, can y'all see my screen where it says exponential moving average? Y'all see that? Okay, like I just said, I wrote everything down. The non-EMA shows the average, shows the average closing price of the last 9 candlesticks. That's what the non-EMA is. It shows the closing average, of the last 9 candlesticks. So it takes it, the last 9 candlesticks was 5, 4, 3, 2, 8, 9, 12. It takes that average and the line starts to form off of it, right? 21 is the exact same thing. It shows the average closing price of the last 21 candlesticks. Okay. The 200 EMA shows the closing average of the last 200 candlesticks. All right. All right. So now, decision-making opportunities. Right here. You see how this green line, let me get my drawing tool. You see how right here, this green line and this yellow line are right beside each other? They're right on top of each other, right? Okay, so when the green line and the yellow line are right on top of each other, eventually that green line will make a decision on if it want to go up or if it wants to go down. Okay, if it wants to go up or if it wants to go down. So they're like this. Think about Pac-Man. Think about Pac-Man, right? And Pac-Man is like this, right? So eventually Pac-Man opens his mouth. Pac-Man opens his mouth and his mouth gets larger and larger and larger. Look right here. On this green line decided the decision-making time that it wanted to go up. And when it started going up, look what happens. It's going up, it's going up, it's going up, it's going up. The candlesticks are going up. That means the price is going up. It's going up, it's going, you still follow that green line, going up, we still following the green line. It's going up, 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 it's going up. That simple. That simple. You guys see that? Whichever way the green line goes. Hold on, let me stop. Somebody said I was moving too fast. Am I moving too fast, y'all? I need to slow down. If I am, let me know. Okay, I'll slow down some. I'll slow down a tad bit. Okay, so once again, let me kind of start from up here. Start from the beginning a tad bit. The green line is your non-EMA. Okay, I want to go over this with you one more time so you can get it. Because I get ahead of myself sometimes. So that's why I want to make sure everybody with me. The green line is your non-EMA. So when you hear somebody talking about the EMAs and the SMAs of the EMAs, what it is it's the closing average. The closing average of the last 9 candlesticks. For example, everybody probably know who LeBron James is. If LeBron James scores 20 points at the end of the game, 30 points at the end of the game, 40 points at the end of the game, for those 3 games, he may have averaged 25 points per game, right? So a line will start to form showing LeBron at the 25 points per game average. The same thing with the EMAs. The green candlestick, the green line is the non-closing prices. The non-closing prices of the last candlesticks. Okay. The 21 EMA is the same thing. It's the last 21 candlesticks or the last 21 basketball games. How many points did LeBron James score in those last 21 basketball games? And it starts to average it out with the line. Okay. The 200 EMA, the last 200 basketball games that LeBron James played in, how many points did he score per game? Then that line starts to average out. Okay. That's what the non-EMA, 21 EMA, and the 200 EMA means. before I move forward, does that make sense? Okay, if it does not make sense, please say no. Okay, so a couple notes. So when I say a line is gonna be formed based off of the last 9 candlesticks. It's the average of the last 9 candlesticks. So for example, LeBron James in the last 9 games, LeBron James averaged 25 points. So this is what's gonna happen on this. This is what's gonna happen on the stat sheet. Let me draw it. And the reason why I'm gonna go, I want you guys to get this. Okay, let me write. Here we go. So right here, his last game, LeBron James, last 9 games, LeBron James scored 25 points. Boom, 25 points right here, right? So now a line is about to start showing. This is the line now, okay? The next game, he averaged 26 points. That line's going straight. The next game, he averaged 27 points. The line is still going to stay straight because it's the median. Yeah, it's the average. The average, this is the average line. Next thing you know, LeBron James go crazy and he scores 50 points. Now what's going to happen? Is this line going to go up or going to go down? Exactly. It's going to start going up because LeBron James scored 50 points. He scored 40 points. It's going to keep going up. He scored 30 points. It's going to keep going up. Now LeBron James only scored 12 points. What is this line going to start to do? Exactly. It's going to start going down some. Going to go down some. Then he comes back and scores 30 again. It's going to start going back up. That's what the non-EMA is doing. It's averaging in the last 9 candlesticks, and it's averaging the last 9 closing candlesticks, and it's forming a line based off of it. Okay? That's the same thing for the 21 and the 200. The 21 is using the last 21 candlesticks, and the 200 is using the last 200 candlesticks. Okay? We good? All right. All right. Now, the next thing is, because I'm going back, is decision-making opportunity, decision-making time, DMT. This is very important, DMT, decision-making time. Whenever you see the green line and the red and the yellow line right beside each other, that means LeBron James has been scoring 20 points a game, 20 points a game, 20 points a game. Hold on 1 second for me, everybody, okay? All right, so I'm back. Okay, so 1 second. All right, so with who is LeBron James? Miss Johnson, you know who LeBron James is. I'm gonna give you a couple. I'm gonna call you next week. We're gonna have a talk if you know who LeBron is. He's not better than Michael Jordan, because Michael Jordan is the best player in the world, and we can cut this whole stock market train off, and we can argue about LeBron James and Michael Jordan if you want to. Don't start in the chat with me. Please don't start in the chat with me. No, I'm with you. I'm with Kobe too. Kobe higher than LeBron on my level anyway. But that's side story. We'll get into that another day. All right, but but the next thing is decision-making opportunity. And y'all, if it feel like I'm yelling, sometimes my wife just told me I'm yelling, like I wake up the whole neighborhood, right? But if I'm yelling, just say Chris, you're yelling. You say Jack, you're yelling. Okay, now calm down some. All right, so whenever the yellow line and the green line is right beside each other, like they laying on top of each other, that means LeBron James has been scoring 20 points a game, 20 points a game, 20 points a game for however long, 15 days, 20 games, whatever, okay? When you see that, it's time for you to put your focus in and focus on that opportunity, because after every after every decision-making opportunity, there's an opportunity to happen, right? Because, let me see how I put this. The green line, the yellow line, right beside each other. They're rolling together, right beside each other. Something has to happen. It's either gonna go up or it's gonna go down. We don't care which one happens, as long as it happens, right? If it goes up, that green line start to show its head and go up, we're gonna buy a call. If that green line start to show its head and go down, we're gonna buy a put. Okay, that green line is gonna go up or down. I'm gonna show you in live action. Okay, I just want to kind of just get you to give you some ideas of it. This is how it's look. Now look right here. Look right here. Second. You look right here. The green line, the yellow line are close to each other. They right beside each other, right? Right beside each other. They're close to each other. Eventually, the green line made a decision and said, we're going up. And boom, it went up. It started going up. You guys see that? Follow the green line. Follow the green line. And we're going to get, it sounds easy, but we're going to get into it. And you're going to be able to see what I mean when I say follow that green line, when we start looking at real life charts, okay? Here we go again. Here we go again. Right here, where I have these highlighted boxes on decision-making time. We have a decision-making time. The green and yellow line are right beside each other. Once again, they're right beside each other, on top of each other, right? What happened? The green line said, I'm going up. Boom, it went up, it went up, it went up, it went up. Boom, it came back. It came back, it came back, it came back. And what did it form again? It formed another decision-making opportunity. Okay, so also decision-making opportunities. Think about this with decision-making opportunities. That means the stock is consolidating. It's in the same spot over and over and over. It's still at that $5, $5, $5, $6, $4, $5, $6, $4, $5 level. It's just sitting right there consolidating. And what does it form? It forms another decision-making opportunity. Okay, and boom, what does it do? Boom, it decides to go up and it shoots up. Okay, that's decision-making opportunities. All right, let's go down to the next one. All right, now right here we see decision-making opportunities. The green line are close to the yellow line again. The green line is close to the yellow line. They're on top of each other. Next thing you know, the green line says what? I'm going down. And it goes down. All right? Boom, it goes down. Then it comes back. And what does it do? The green line comes to the yellow line again. It's decision-making opportunity. And what does the green line say I'm doing? I'm going back down. Boom, it goes down again. What happens again? It comes back, the green line comes back to the yellow line again. And what does it do? Boom, it goes back down. Okay, whenever the green line and the yellow line comes close to each other, a decision has to be made. It's going to go up or it's going to go down. So whenever you're trading stocks, whenever you're trading as a beginner, the only time you should buy a stock, the only time you should buy in on a contract is when it's decision-making time. Don't buy in. Keep in mind, put this down in your chapter. Only buy in when it's a decision-making time. If you do this, 7 out of 10 times you'll win. Only buy in when it's decision-making time. Okay? Okay, this is another example one. Right here. Boom, 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 boom. Green line, yellow line, right beside each other. Green line, yellow line, right beside each other. Then boom, the mouth opens up. The green line says, hey, I'm going down. And it goes down. You make your money. it goes down, and you make your money. Okay. All right, JT, let's do a Q&A right quick with the for the decision-making opportunity and the EMAs before we jump into the actual chart.
Okay, someone says, so see, first counter after the green and yellow touches tells you if you should buy a call or a put, right?
So good question. That's gonna jump into chapter 3. Okay, so that's gonna jump into chapter 3. We'll get into that in a few. Okay, so hold that question. But that's a great question. You put it together already. Good stuff.
All right, someone said when both green and yellow are on next to each other, so decision-making time, does that mean buyers and sellers are in agreement?
That means right now buyers are selling or in this, they basically are battling back and forth, right? It's basically like it's like the tray, like the jury is 12 people and they're 6 and 6 right now. It's a hung jury right now. Okay. And basically we're waiting to see which way it's gonna go. Or in other words, you're playing football. And the game is 7-7. It's been 7-7 the whole first quarter. It's been 7-7 the whole second quarter. It's been 7-7 the whole third quarter. And it's been 7-7 in the fourth quarter. And we're waiting for who's going to win this freaking game. Is it going to go up? Is it going to go down? Exactly. Tug of war. It's tug of war. Exactly.
All right. Someone says, so when we're looking at the decision.
Yes, it's consolidating. Sorry, T. Somebody, Mr. Oliver said, so yes, it's consolidating. That's exactly what it's doing. It's consolidating. Sorry, T. Go ahead.
No, you're fine. So someone said, well, we're looking at decision-making time. Do we look at the nearest support and resistance and we'll know the numbers to target?
Who is that? Who asked that question?
Latoya.
Latoya who? Latoya Luckett, the singer from Destiny Child? Latoya who?
H.
Latoya H. Latoya Hayes. Shoot me that cash out, Latoya Hayes. You just won $100. You put it together. I said somebody's gonna put it together, and you put it together. That's what I'm talking about. That's how chapter 1 and chapter 2. Latoya Hayes just said. So you look at. Repeat the question, JT. So I make sure I give Latoya Hayes this money because I'm gonna make sure I didn't hear what I.
Latoya H, Chris, with just an H. I don't know if it's Hayes or not.
Yeah, she put in the chat Hayes.
Okay, I ain't scrolled down yet. So she said, when you're looking at decision-making time, where the nearest support and resistance is, and we'll know the numbers to target.
Yep, that's definitely close. I like that. I like that question. It's around that ballpark. I'm gonna shoot you $50. I'm gonna shoot you $50 cash app for that. So send me your cash app. Say cash app plus $50. I'm gonna shoot that over to you. So what she was saying is we about to get into that next. Okay, good question. Next thing, what did B Pot say? Do you couple enter doing DMT with support and resistance strategy? Do you B Potts, Brandon? I think that's Brandon Potts. Ask that question one more time, Brandon. But JT, go ahead with the other questions.
Bunch, because I had scrolled down. Let's see. Let me pick one right up here. So someone's just asking clarification. I've seen this a couple times. Green below yellow is a put, and green above yellow is a call.
Yes, that's correct.
Can you use the same method for day trading stocks, not options? This stocks.
Yeah, definitely.
All right. How long do you follow it before making a decision?
Good question. We're gonna get into that next. That's third chapter.
So should you only buy and sell when you see them separate?
Should you buy and sell? Should you buy and sell when you see them separate?
So they said so you only buy and sell when you see them separate. I'm guessing like when the green and yellow is apart.
So you buy when you see them together, right? You buy when you see them together, and we'll get into when you sell in a few, okay? So when they're together, that's when they okay, I follow what you're saying. Yes, when they start to separate, that's when you actually start to buy. But we're gonna get that next witness gonna tell you, give you a better idea when to buy.
All right. So if the lines are not neck and neck, we don't buy anything?
I would not. No. Great question. If those lines are not close to each other, I'm going to show you different ways they can be close. If they're not close to each other, they're not horizontal to each other, I would not buy into that stock. Okay? Because at a decision-making opportunity, that's where the money starts. Okay, when the green line and the yellow line are not close to each other, the money has already been made, right? Now, if you're the person who gets in, then you're gonna start off losing money because that green line has to come back to that yellow line eventually. But I'm gonna show that to you next, okay?
All right, someone said, how often do they come close in a day? Decision making time.
Oh, it can be 4 to 5, 6 times they could, right? It could be 3, it could be 2, it could be 4, it could be 5, it could be 6. It all depends on the type of trend it is.
All right, and what time frame are you looking at for decision making time?
So, great question. When you're day trading, I'm on the 5-minute, okay? 5-day, 5-minute when I'm day trading. I make all of my decisions based off of the 5-minute, right? 5-minute, 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 okay? When I'm doing swing trading, I base my entry points off of the 180-day 4-hour, 180-day 4-hour, okay? So when I'm day trading, I have my 5-day 5-minute up, and I make my decisions off of that. But I also have my 4-day 2-minute up as well, okay? When I'm swing trading, I'm basically looking at 180-day 4-hour candlestick. So the 4-hour candlestick. Okay. The 1 day 1 minute. The 1 day 1 minute is tricky because it does tell you exactly what's going on right then and there. But on that 1 minute candlestick, you can have a big green candlestick, and then you're like, oh, it's a big green candlestick, let me get in. Then that next minute candlestick is a big red candlestick, right? So you want to have a little bit more time in between there. Okay, any other questions, JT?
I think you're good.
All right, so let's jump into the charts. Brandon, I'm still not understanding your question, Brandon. When you said both couples, you said both couples. When you said couple, I'm getting thrown off when you say couple. 2 minutes. Devon Davis. I use the 2 minutes. 2 minute when I'm scalping. All right, cool. All right, let's jump into the charts. Let's see. All right. So let's put this thing together now. All right. Let's put this thing together. So we're gonna stick on it. We're gonna stick with Tesla, okay? I'm gonna go to the 180-day. Nah, I don't like that because it's too many lines. We're going to let me erase some lines, bro. Going to remove here, all right. So I'm gonna do I'm just gonna do some quick support and resistance levels right quick, okay? So support and resistance, draw some lines right quick. Right, come here. Boom. I'm gonna go down to my 4-hour right quick. And I'm drawing these for the actual for what we're about to do right now. That's why I'm drawing these. And basically I'm gonna draw the levels that we just previously had for the most part. Right here. Okay. Right here. Here. And I like this one right here. This is nice. Yep. All right. So that's the 4-hour. Okay, so now we're on the 4-hour, y'all. Now, Can everybody see my screen? Is it pretty clear? Let me remove some stuff right quick. Edit studies. That, then get rid of the art side. Apply. Okay. Zoom down. All right. Now, let's put chapter 1 and chapter 2 together. All right. Chapter 1, chapter 2. Let's put it together. All right. Let's zoom in right here. Matter of fact, let's go out for a little bit. Let's start right here. Give you a great example right here. Live, great example. Okay, so right here, we see, can everyone, do I need to zoom in and can everybody see? Good, 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 good. Okay, perfect. All right, right here, we have a decision-making opportunity. Everybody see this, right? You see that green line and the yellow line are right on top of each other. Okay, they're right on top of each other. Now, this is for a swing trade. Remember, when I say I'm doing swing trades, I always use the 4 hour. Okay, the 4 hour, the 180-day 4 hour to base my decision on what I'm going to do. All right, to base my decision on what I'm going to do, I always use the 4 hour. That's going to be my entry point, especially for the individuals that have to work 9 to 5 jobs and they're not going to be sitting at the house trading all day. This is what you're going to do. You're going to come home at night before the morning happens or early in the morning. You're going to jump on here, draw your lines, come to the 4 hour day and say, okay, what stocks are at a level or at my support or resistance level? What are the candlesticks saying? Is it a decision-making opportunity? If it is, okay, boom, XYZ, I'm gonna buy this stock tomorrow morning on a swing trade for 3-4 weeks. Okay. This is kind of how you break it down. Now look at this masterpiece, okay? Right here. This is decision-making time. The yellow line and the green line are right beside each other. They're on top of each other. Okay, they're on top of each other. And we see that for each candlestick is 4 hours. Each candlestick is 4 hours for time. So we have 4 hours. So that's 4 hours, that's 8 hours. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10. That's 10. That's 10, 4 hours. That's what, 40 hours. That's 40 hours. Okay. Almost 2 days that this stock has been in this level, at this level. Okay. And it's decision-making opportunity. So what the main thing we're focusing on is what is something, let's see who get this right. Whoever gets this right gets $50. What is the underlying factor right now with where these candlesticks are at? Okay. Thank you. Chris Blast Scott just said it. Chris Blast Scott, shoot me your cash app. He said it. Chris Blast Scott just said it. When you're looking at this masterpiece and you're looking at the story, this is why support and resistance is so important. The candlesticks are on the support level, right? They're on the support level. Okay. It's consolidating. It's decision-making opportunity. Okay, it's decision-making opportunity. The candlesticks are on the support level. So right now, what's happening is this: we have a bowling ball in our hand. All right, you at your house, you at your home right now. Okay, y'all gonna look crazy doing this. Somebody gonna look at y'all and say, "What's wrong with you?" Act like you're holding a bowling ball, right? And look down at your floor and throw the bowling ball at your floor. So boom, 4 hours. For 4 hours, we threw it out floor. The floor didn't break. We did it for another 4 hours, threw that ball back down, it didn't break. We did it for 40 hours of throwing that bowling ball down at that floor for 40 hours, and it did not break, okay? So it's still consolidating. It's decision-making time, okay? But next thing you know is we threw that ball again, boom, uh-oh, What happened? We threw it again. Let me show you. Right here. You see how it was right here, the decision-making opportunity, and now you see this mouth opening up right here. You see the mouth of the green mouth opening up, and you see what else happened? It broke what? It broke support. It broke support. Right, where was it? Here we go, back here. Go back, go back. Oh man, I lost my spot. Where was it? Right here, yeah, right here. What happened? It broke support. Yes, everybody, it's put time. Because this is what you're looking at. Your first witness, the first chapter of the book, the first witness is decision-making time. You found your decision-making time. Okay, your green line started to bend down. It broke through this level of support that has been there for 40 hours. We've been throwing this freak, we've been sitting here every minute throwing a bowling ball, picking it up, throwing a bowling ball, picking it up, throwing a bowling ball, picking it up at this floor. Okay? Then it finally broke through. The green line starts to go down. The green line starts to go down. Now keep in mind, this is on a 4-hour time frame. If you're day trading, you're going to drill down to a 5-minute time frame. So you're going to be able to see this thing in real life. You're going to really be able to watch it happen. So this stock of Tesla went from 668 all the way down to 632 in one day. That's a $30 swing in one day. Okay? For somebody that was $3,000. If you bought one on this day, if you bought one contract of Tesla with a 50-cent delta, I'm gonna break that down to you later on. You made almost what? $2,000 something, probably more. Okay. But this is what happened. It shot down, boom, broke through support. It's put time. It's buy put. Okay. Does that make sense? Does that make sense? Okay. Okay, good stuff. Give you some more examples. You go another one. And another one. You go another one. Sound like DJ Khaled and another one. Okay? Right here. Decision-making time. It's doing the same thing. It's on this level of support, 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 doing the exact same thing. It's decision-making time. Next thing you know, we see that mouth open up some. It's opening up, it's opening up, it's opening up. Then, boom, the floodgates of heaven. Look at that. The floodgates. Because the only thing you're doing is what? You establish, and this is the thing about it, though. This is the thing about it. This is how fast something turns into support into resistance. Remember what I said, when it first breaks support, sometimes you got to just wait and make sure, or resistance, you got to make sure because that hole is in the wall, right? That hole is there, right? Look at this. On this candlestick, and you'll be able to see this clear when y'all look at it. Exactly. Light Feather 96 said test it first. Exactly. So boom, right here. This is right now, this is support. This line right now is support because it's on here. It went up, it came back down, boom, it bounced off support, went back up right here a little bit on support, It finally broke support right here. It finally broke support right here. Okay, on this 4-minute candlestick, it broke support. It came back up a little bit right here and tested it, right? Then it came down here. Then it came up here. You can't really see this candlestick, but it's a doji candlestick right here, I believe. It tested it again, and then from there, it just said, I'm gone. Okay? So this was support. So this turned into resistance. At resistance, do you buy calls at resistance or do you buy puts at resistance? Exactly. Never buy a call at resistance until that line becomes support, and then you buy that support. Okay. Now, since we know that this has become but what we know is this was once support, right? It was once support. So when it's support, we're looking to say, okay, is it going to go up for a call? But when it broke through and became and this line became resistance, now we're looking for a put. Okay, so this is resistance. Now we're looking for a put, but we're looking to see if what's going to happen with this green and the yellow line. And it starts to bend down. And when it bends down to support a resistance, that means it's a put and we're going for a ride. That's a swing trade opportunity. Ride it down, make this money. Look how far this thing went down. It went from up here at 669 all the way down here to 560. Okay. Does that make sense, everybody? So if you would have wrote this thing down here, you would have made a lot of money. A lot of money. Okay. All right, let's find another one. This is on a 4-minute counter. This is for my swing traders, okay? This is on a 4, and also this is for day traders too, because you can look at this to kind of get an idea of what you think that stock is going to do as far as the day trade as well, okay? You see how do you guys see how we put in chapter 1 and chapter 2 together to make a decision? I'm trying to find, okay, here we go. I didn't go all the way down there. Okay, perfect. Here's another one. Yep, we're gonna tell you, we're gonna give you an idea how long to stay into a trade. I'm gonna break that down in a moment, okay? Let's go to here we go. Right here. Decision-making opportunity. This is on the 4-hour decision-making opportunity. What is this right here? This is our support, right? This is support. Okay. You got support right here. All right. Got support. And then you got both lines are close to each other. Now we're on support. Do we buy? There you go. Yep. We buy calls at support. We do not buy puts at support until that support becomes resistance. You got me? As long as that support is support. No, as long as the support is support, that's when you're looking to buy a call. And look what happened. They're both beside each other. Now you see, they don't have to be boom flat on top of each other as long as they're in close range with each other, right? And they're horizontal. They're close to each other, and then boom, it starts to bend up, starts to bend up. You're in a call right now, right? You're in a call. So you don't went from 560 to 600. 560 to 600. And let me tell you this, that's almost a $40 swing, right? That's a lot of money. Keep in mind, each one of these candlesticks are 40 or 4 hours worth of buying and selling. If I know this is my level of resistance at this 640 mark, when I get up here, what do I do? If I've already bought the call, when I'm getting to my next level of resistance, what do I do? Good stuff. My man. Good stuff, y'all. Good stuff. No, you don't buy a put. You just sell. You sell, take your profits, and you wait and see if this is going to go back down to 560 or if it's going to break and go back and break and go up. Okay, so boom, you bought in right here. It went up here because the green line started to go up, and then boom, it comes up to 600 almost, which is your next level of resistance. Boom, you sell, you got out, you made that profit, and now what are you waiting to do? You're waiting to see on what? We got consolidation. Whenever you have consolidation, what do you have? You have a decision-making time. Exactly. Good stuff, Nick. You have decision-making time. And look at these lines. They're still close to each other, right? These lines are still close to each other. Let's go. Let's see. Boom. These lines are still close to each other right here. They're still close. They're still close to each other. Okay, so right now we're looking at potentially buying a put because this is resistance. You buy the put until resistance becomes support, and it tests, right? And it tests. So now we keep going. We see that it breaks resistance. Now what's happening? It breaks resistance. The green line is still going up. The green line is still going up. This bar, this one right here has tested your level of support. It did not fall through that hole, and the green line is still going up. What do? You buy a call and you ride it up because that line became support, and you ride it up to what? The next level of resistance. And you may say, Chris, these are small jumps, but think about this. This is 600. It went from 600 to 660. That's $60 swing. Keep in mind, these are 4-hour candlesticks. If I break this down into 5-minute levels, this is like a whole bunch of money. It's like thousands and thousands and thousands of dollars, right? All because you know the green line, support and resistance. Okay, so boom, you let it go up until it breaks. Boom, it hit support, it hit resistance right here, which is that 635 mark. Boom, you got out right there. Do the same game over and over and over. Once it breaks support, once resistance comes support, you keep on going up, 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 and up. Okay, does that make sense, everybody? If it does not make sense, please say it does not make sense. I will go over it again. I'm about to go over it again regardless anyway, but I will go over it again, okay? But that's what you do. You find your decision-making opportunity. Once you locate your decision-making opportunity, is your decision-making, are the candlesticks close to support or resistance, okay? And then whichever direction, yes, I'm gonna go over here and I got you. Whatever direction that green line goes, boom, that's what decision you make. Now let me drill down some and show it to you a little bit clearer, right? You better see it a little bit clearer, right? Let's see what we can find. Right here, for example. Perfect. Beautiful, 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 beautiful. Here we go. The first thing you see right here. Okay. Let me go back right here. Grab that. I didn't draw. Matter of fact, let me go to the 15-minute and draw my lines right quick, my support and resistance for this. So I can have that. Okay, I see it consolidated here too. That's good consolidation. It consolidated right. That's my low right here on the 15-minute. I like this level right here. It hit this level plenty of times overnight. It hit this level a lot overnight. Okay. All right. We'll go down to the 5-minute too, make some lines on the 5-minute. We're gonna jump into the 5-minute too. 5-minute right here level. Let's go back. I'll make this a level right here. Remember when I say when you're doing 5-minute levels, right? The reason why I say when you're doing on the 5-minute, you're day trading. Most every point that's hit once or twice, especially 5 minutes. Because think about it. If it's been hit one time on a 5-minute, that means it's been hit almost 2.5 times on the 2-minute, or it's been hit 5 times on the 1-minute. Okay, which you got to think about. All right, we should be good with that for now. So boom, let's go down to the 5-minute. Here we are. So you wake up the next morning, right? You wake up the next morning, you're day trading or whatever. You say, okay, I'm gonna draw some support and resistance lines for the pre-market. So you see the low for this day right here was right here. Okay, boom. You see the high was right about here for pre-market. and you see that it's been consolidating around this area right here. It came here, hit, went up, consolidated, hit, it consolidated around here the whole time, came up. You see it's consolidating around this line, hitting right here, hitting, consolidating. So that's a level right there, okay? Y'all follow me? Y'all with me? Y'all good? Okay, now let's go close and take a look at it. What is the first thing that we see right now? If you guys are looking at this screen and y'all see that we have our green and yellow line and we have our support and resistance, and we see the candlesticks, right? The candlestick, the opening candlestick is right here. This is the opening candlestick. This is 929 right here, or 925. This is the opening candlestick right here. So right before the bell opened, you're right here. What does that tell me? Okay. What it's telling me is this. It's telling me that this particular candlestick is on a level of support, right? It's also telling me, it's also saying, I got decision-making opportunity, right? I got decision-making opportunity, right? If I'm on a decision-making opportunity right here, and I'm testing support, the first thing I'm thinking in my mind, okay, I'm testing support. It's been here all day. It's been here all morning for the past, since 7 o'clock. If you go right here from 7 o'clock, it's been right around here almost, right? Inside of this, right here on this line. It's decision-making opportunity. Whichever way that green line goes, that's the way I'm going. That's the way I'm going. So I'm on my support line. If I'm on my support, I'm thinking more so of a call. It's not a guaranteed call, but you're thinking about a call, right? And it's decision-making opportunity, okay? So boom, the green line opens up, and what happens? You got a big boy candlestick, and that green line starts to go up, and she's moving, she's moving, she's moving, she's moving. The green line's going up, she's moving, she's moving, she's moving, she's moving, she's moving. She's breaking every level of support that you have right here. She's breaking every level of support. And when you're day trading, you're looking at these level of supports and resistance that you have, you're not automatically selling your levels. When you're swing trading, you're selling your levels because you have a longer time frame. Like you have like $20, $30 jumps in between resistance and support, right? But when you're day trading, you may have $3 swings in between. You might have bought in it. We bought in like at 580, right? It went to 584. You don't sell immediately right there because it's only a $4 swing. You see what I'm saying? But when you're swing a $4 move, but when you're swing trading, your support and resistance are about $20 to $30 difference, right? If that makes sense. Okay. But so you boom, it comes here, it went up $4, it tested, it broke through that, it came back here, it went up, it broke through. These all 5-minute candlesticks, breaking through to this level of support. It went from 580 to 598 in roughly 30 minutes. That's a lot of money. Okay. And you knew to look here only because the candlestick was testing support and it was decision-making time. That green line said go up. So you said, okay, I'm riding with the green line. I'm buying a call. Does that make sense? All you have to do is follow the green line. Follow the green line. Follow the green line, okay? All right. JT, let's have a quick Q&A right quick. Let me unmute. All right. You got any questions, JT?
Yes.
Okay.
How often do you see the candle indicate call or put after the green and yellow line were closed? And do you buy what's indicated, but it suddenly turns in the other direction?
Yes, that could happen. Remember when I always say 7 out of 10 times, that 3 times you lose is because sometimes that candlestick can definitely start to go up, and that line can go up, and then boom, it drops to go the opposite way. That's why you set your stop loss, just in case that happens, okay? And we'll get into that when we talk about risk management.
When you are in decision-making time, do you wait to make a move until the green line begins to move?
Yes. Anything else would be guessing. And trust me, I guessed a lot. I've definitely made moves before the green line showed its face because I got so impatient. I'm telling you, it takes time to sit here and watch this thing. If you're day trading, right? If you're day trading and that's what you do, day trade, you sitting here watching this. This is 5-minute candlesticks. So each candlestick is 5 minutes. That's a long time. You see what I'm saying? That's a long time. So yes, you wait until you start seeing your move happen.
How do you find stocks that are about to have a decision-making time? Is there a way to set up a scanner or some other way to find them manually or get alerts on them?
Yeah, so you can do scanners. I do not do scanners because I trade the same stocks over and over and over again. You know, I get comfortable with a particular stocks. That's what I stick with. But what I tell most people is I'm going to set your watch list up with the Dow Jones watch list. You know, once you start getting comfortable practicing, practice with like 5 stocks, man. That's all you really need. You do not need a whole lot of stocks. Practice about 5 stocks. And every morning or every night, you look at those 5 stocks and see, hey, am I at a decision-making opportunity? Am I at support or I'm at resistance? And whichever one tells you, hey, I'm at support and I'm at decision-making time, that's the one you watch. Or I'm at resistance and I'm at decision-making time, that's the one you watch and that's the one you focus on because it's time to make some money is about to be made.
At what point would you sell in this situation?
Perfect, beautiful. I'm gonna get into that in a minute, okay? Hold tight on that question. I'm gonna get into that in a minute.
Do you wait for the green line to go up or do you go ahead and buy a call because you're at your support?
Wait for the green line to go up, but keep in mind, remember, like I said, it's at that support level and it's been at that support level. So it's still throwing a bowling ball at that support level. Okay. So it's throwing a bowling ball at that support level the whole time. We got to see if that floor is as strong as it say it is. Is that really hardwood? You know what I'm saying? Is that really hardwood floor? Is that really cement? Because that's where the buyers are at. The buyers are not letting it go any lower than that right now. But if it breaks through and that green line goes down, that floor has broken. But if that floor never breaks and it starts to shoot up, you got to buy a call. So that's why you just because it's at support does not mean you're gonna buy a call. It could go the opposite way as well. So that's why you always wait on what that green line does.
All right, so a lot of these, so I'm just going through a lot of them, the same question. I know some of them you're about to get into as far as, you know, how far out do you buy your contract?
Yep, we're gonna get into all that. I seen something from Mr. Oliver. Mr. Oliver just said something. Let me see what he said. So do we watch for consolidation in the 4-hour and switch to the 5 minutes to see the split? No, if you're day trading, you just stick to the 5 minute. The 4-hour. Now, if you're doing a swing trade and you're about to jump into a swing trade, you can if you're about to jump into a swing trade and you're saying I'm at the house about to look at it, you can have 2 screens up. I have like 6 or 7 screens up, right? So you can have the 4-hour up if you want, and you can have the 5-hour up too as well. However you want to see it. But the thing about it, when you're swing trading, you will see a different picture than what you're seeing right now. The story will be told, either already been told or it's about to be told.
All right, Chris, do you wait for the first candle that opens above the green line during decision-making time or get in on the candle where the green line's turning up?
Great question. This is that first candlestick is your attention grabber, right? That next candlestick is your confirmation candlestick. Okay, that's your confirmation candlestick. And we're going to get into that next. That's chapter 3 of the book that you're writing.
All right, someone asked, when the green line trends up or down, how often have you seen it fake out?
It happens. It happens, right? It definitely happens. Like I say, 7 out of 10 times. So 3 out of 10 times it may happen. Like it's it kind of goes, but you will see the strength in it, right? You will see the strength once we actually put everything together, and you will be able to tell the story the way you need to tell the story. Okay, that's what we're gonna tie all this in today. Yep, Devon Davis, got to pay attention to that volume. That's part of this. That's part of the chapter 2. Yep, part of the chapter as well. Any other questions, JT?
I think we're good right now.
Okay, so next thing, this is the question that everyone's been asking, right? When do you sell? How do you sell? Okay. Okay, this is a better one. Oh my God, look at this. Okay, this is beautiful. All right, right here. So this is another example on the 5-minute decision-making time, right? Decision-making time is kind of in the middle. At support some, right? Is that support? This is like the person was saying, is that support? Do you automatically buy a call? No. Look at this right here. Is that support? And look what happened. It fell down like, oh my gosh. You see what I'm saying? But this is the beauty of it. This is what I love about puts. Puts move. This is so much money right here. But think about this. All right. When you're walking a dog, say you're walking a dog, and you're walking a dog in the park. And when you're walking that dog in the park, the dog starts to run away from you. When a dog runs away from you, what do? Say the dog is on the chain, right, on the leash. You walking the dog, and what do you do when that dog starts to run away from you? Yes, you pull the dog back to you. Exactly. So listen to what I'm about to say. The green line, you are the green line. Okay, you are the green line. The candlesticks are the dogs. Okay, you're the green line, and the candlesticks are the dogs. So boom, right here, the candlesticks is touching the green line, right? The dog is, keep in mind, the dog is the candlestick. You got to follow me on this one. You got to follow me on this, okay? The dog is the candlesticks. You are the human. So you guys are walking through the park. The dog starts to run away from you. He's running away from you. Boom, he's running away from you. Now, right here, the dog is out here and the owner is right here, right? The owner is the green line. You are the green line. The dog is the candlestick. So since the dog is all the way out here, he's done ran away from you, and you are right here, what are you going to do to the dog? Pull, tug, yes. Call him back to you. Pull him, bring him, pull him closer. Exactly. That's exactly what the candlesticks does. No matter what happened, the dog always comes back to the owner. The dog always comes back to the owner. So when the dog runs away, when the candlesticks runs away from this green line, look what happens. The candlesticks runs away and it says, okay, I'm forward for my owner. Let me come back. He comes back to the owner a little bit, runs away again. Then he comes back to the owner again, runs away again. Then he comes back to the owner. He runs away again. And then he comes back to the owner. Okay, let me give you another example. I'm gonna give you another example so I can tie it in for you. I want you to see this first. Oh, this is beautiful. This is perfect. Right here, once again, this is put action. Decision-making opportunity time. It goes down. Boom, boom. The dog runs away from the owner. Right? You see it right here, right? The dog, the candlesticks is the dog. You are the green line, the owner. The dog runs away from the owner, right? What does the owner do to the dog? He pulls the dog back to him. Now the dog is being a good dog. He's walking with his owner. Then the dog runs away again. What does the owner do? The owner pulls his dog back to him. Okay, now boom, the dog runs away again. Boom, the dog runs away again. What does the owner do? The owner pulls the dog back to him. Y'all, listen. This is every single day in the stock market. The dog is walking the owner. So you say, Chris, when should I sell? When should I sell? This is when you should sell. You should sell, and this is what we call it. So if you hear people talking, might hear people say, man, that candlestick walking that non-EMA. That candlestick walking in non-EMA. When it say the candlesticks are walking in non-EMA, this non-EMA is going to act like a level of support for you. Okay? This is a level of support for you. All right? What happens when something breaks the level of support? It may go the opposite way, right? So when you're in this trade, it goes down, comes back to the owner. When it comes back to the owner, as long as this candlestick does not break and go back the opposite way, you can stay in the trade. All right. So say, for example, this goes all the way down. I'm going to just use whole numbers. It goes all the way down. You get $1,000. Keep in mind, whenever the dog comes back to the owner, you're losing money though. Okay. So it dropped all the way down. You made $1,000. The dog is walking back to the owner. Now your $1,000 may go back to $800, $700. And then boom, it comes back to the owner. The dog say, okay, I'm just checking in with you, owner. Big dog, I'm just checking in on you. I'm about to go back out here and chase these squirrels, chase these birds around. I'm gonna holler at you, but I'll be back. So boom, he runs away again. Now your $1,000 is turned into $1,200. But the dog got away. He comes back to the owner. So that $1,200 may go to $900. Hey, I'm just checking in with your owner. You know, we good. We in the park. We chilling. I'm chasing dogs, throwing frisbees and all this stuff, getting tennis balls and stuff, right? The dog runs away again. Boom. He runs away again. Now you up $15, $16, $17, $1,800, right? The next thing you know, he comes back. He comes back. But this time is different. This time is different. He comes back and he kind of breaks through that green line. No matter what happens, I'm out. I get out. I've made entirely too much money on this downward trend to lose my money off of this. All of those are puts. Yes, these are puts. To lose, even though it continued to go down some more, I've made enough money. But once it breaks my green line, once it comes to the owner, so what this did right now, it came to the owner, then it ran the other way. The dog started going the other way. So we've been walking south the whole time. Me and the dog were walking south the whole time. He runs down south, comes back to the owner, runs back down south again, comes back to the owner, runs back down south again, and he comes back to the owner. But this time when he comes back to the owner, know what he does? The dog starts to run north. Immediately when he starts to run north, I'm out, taking my profits. I'm done. Done, did it. You see what I'm saying? I'm done. Okay? And also, you got your levels here already. You got your support levels here too. So what you know is this. This is a level of support. You see what I'm saying? When something hits the level of support, sometimes what does it do? It bounces and goes up sometimes. We don't want no parts of that. Listen, I done got tied up in that so many times, it's ridiculous. You do not want any parts of that. When that dog comes back to the owner, take whatever profits you got and don't be greedy. Okay? You made enough money for the day. You made more money than you possibly made in 2 hours than ever, right? Yeah, Patricia, I'm done with the dog. We going home. Exactly. Okay. Is that clear to you guys? Does that make sense? Yep, it works in reverse as well. I'm about to show it to you as well. It works in reverse. I'm gonna try to find a good one for you. This is a real put week. This is a lot of puts this week. Let's go back some more. Let's go to just do a 15-minute. Nope, no 15 minutes. Try different stop. I want to find a good one for you, so let's see if we go. Let's choose butter, Amazon. 5-minute, no. Let's see. Yep, Amazon is definitely my favorite. I don't see anything that's really that good because this week has been kind of AMC messed up a lot of things this week. So let's see. Clear all drawings. I want to find another call for you that actually did it, but let's do it. We can do a put if we need to. Matter of fact, let's do this. Let's do this. Someone put a stock out there, and let's go find on the stock. You can do this for any stock. RIDE, is that a stock? RIDE? Is that a stock? RIDE. Yeah, it is a stock. That's yeah. Lorison Motors. Cool. Let's see. Let's see if we got one. Okay, so we don't have a call, but let's look at it though. Let's look at how it is the exact same thing. Because there's a lot of puts this week, so that's basically the main reason why you're not seeing a lot of call action. But let's go. Oh, no, this is perfect. Here it goes. Ha. Good stuff. Whoever said ride, good stuff. Here it goes. Perfect. Now, what is this? This is decision-making opportunity, right? I don't have any support levels drawn on this stock. I haven't traded this stock before, but okay. This is decision-making opportunity. All right. Decision-making opportunity. We looking at it, we're looking, we're waiting, we're being patient, we're being patient, we're being patient. Next thing you know, it starts to show its mouth and it opens up, right? So boom, it opens up. The dog is far away from the owner. What does the owner do? Come on back to me, brother. The dog comes back to the owner. Hey, I'm just checking in with your owner. I'm about to go back out and chase these dogs, chase the squirrels, chase some tennis balls, so on and so on. Boom, it shot up again. They candlesticks far away from the owners. Come back. Hey, boom, I'm just checking in on you. Like you say, treat time. Get a sip of water, da-da-da. What do you do again? Boom, he takes off again. What does he do? Oh, I'm coming on back. Boom, 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 boom. Coming on back to you. What's happening with you? What's happening? We good? We good? Okay, everything good. What do you do again? Boom. What happened to my... There we go. Boom, he goes up, runs away again, and then, yes, John, Booker, yes. These are 5-minute candlesticks, so you're going to see stuff in real time. That wick that broke through, don't worry about the wick, right? Because the wick is just that thumbtack. In order for us to see something that's breaking support, keep in mind that green line is your support line. In order for it to break that support line, we want to see a bowling ball, not the little thumbtack, okay? Good question, a great question. So boom, we ran away again, and boom, we came back. Hey, I'm just checking in on you, big dog. And then boom, we came up here. It's doing what it's doing. Immediately, what we're going to do is this, though. We're going to draw some line of resistance right here, if we haven't had one there already. Because it hit one time, boom, came back down. Boom, it hit again. Then it came back down. It's hitting, and then it said right here. Boom, right here. I'm out. Done, did it. I'm gone. But why? Because it broke my support. It broke my support. I am gone. I'm taking all these profits, though. Look at all that profit. Okay? Okay, do y'all see that? Annette, what are you doing? Annette marking up the screen. It's all good, though. All right, that's a lot of profit, buddy. That's a lot of profit. So think about this. This is a lot of profit right here. Okay, a lot of profit. Because you got in right here at $10. This thing went up. This thing went up, and you sold at $12. That's a lot. That's a $2 swing. It's a lot of money. Depends on how many contracts you bought. That's a lot of money. Okay. All right. But do you guys see how that rides? So this is how you know when to sell. Okay. That's how you know when to sell. You ride this thing. You play the I call it the dog walking the owner game. The dog walking the owner game, man. You play it the whole time. And it's this non-EMA is your level of support. If the candlestick breaks the non-EMA and closes below that non-EMA, get out, take your profits. Get out, take your profits. Okay. And the thing about it, it looks so simple right now. This stuff is scary as crap. When you be in this trade for real, say you got in right here, boom, you making money, $1,000, you up $1,000, and next thing you know, it start consolidating. You see this thing going down, going up, going down, going up, going down. I mean, your heart like this. Okay, oh crap, okay. Okay, oh crap. You see what I'm saying? Then you start seeing your $1,000 going down to 500, going up to 600, going back down to 500, going to 600, going to 500. Then boom, that thing happened. You like, okay, I held on, I waited, baby. Yes, baby, I'm in there. I done made it. Now I'm at $15, $16, $700. And then boom, big boy red candlestick, big boy red candlestick. But you know this, if it does not break my support, I'm staying in the game. You either listen to this, you either stand in the game for the ride or you're getting out because you already hit your goal. Either or, either stay in the game because you hit your goal or get out. I mean, stay in the game because get out because you hit your goal, or stay in the game because you're just riding along with it. Okay. All right. That's called the dog walking the owner. And you will see this on you can tell me any stock. If it has a trend, the dog is walking the owner. Okay. Does this make sense to everybody? Let me stop right here. JT, let's do a quick Q&A before we move to the next chapter.
All right, let's see. No questions yet. We answer. I'm going to see if something comes through.
Okay. All right. Well, let's go ahead and move on to the next one. Move on to the next one. Move on to the next one. All right. Chapter 3, everybody. So let me do the chapter 2 recap. Chapter 2 is your EMAs, right? And in your EMAs on chapter 2, what you're looking for is the green, the yellow, and the red. The green is the non-EMA, the yellow is a 21 EMA, and the red is a 200 EMA. Okay, and what you're looking for is decision-making time in that particular chapter. You're looking for decision-making opportunities, right? Once you find your decision-making opportunities, now that's when you say, okay, let me look and see what's my support and resistance, where I'm at. Okay, where am I? Right? That's when you bring in chapter 1. Next thing you do from there is you follow the green line. Follow it. But now what we're going to do is we're going to answer the question. Once you see that green line start to move, when do you get in? How do you know when to get in? This is chapter 3. Chapter 3 is called candlesticks. Okay? Chapter 3, candlesticks. All right? Chapter 3. So in your book, chapter 3, go ahead and type in candlesticks. Okay. Everybody can see my screen where it has entry points to buy calls. Okay, perfect. Now remember, you guys, you are writing this book. Oh, Alice, just any notebook that you have. Any notebook that you have. Like I told everybody to grab a notebook and, put in the first page of the notebook, put goals, and that's how much money you want to make a month. Okay, break that down, divide it by 20. That's how much money you want to make in a day. Chapter 1 was support and resistance, because you're writing a book in your notebook. Chapter 1, support and resistance. Chapter 2 was your moving averages. and your decision-making times, DMT. Now, chapter 3 is your candlesticks, okay? Entry points, candlesticks, okay? Now, these candlesticks on the screen right now, these are your powerful candlesticks. Powerful candlesticks, okay? These are powerful candlesticks. All right, very powerful candlesticks. All right. So, why are they powerful? Thank you, JT, for that in the chat. Appreciate it. So, entry level candlesticks. Why are the? What is wrong with my? I'm not froze. Am I froze? I don't think I am. I'm good, everybody. You can see me. Okay, cool. All right. Why are these powerful candlesticks? Whenever you see that big boy, I call it the big boy green candlestick. That big boy green candlesticks mean it opened right here, and everybody just started to buy. Boom, 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 boom. Everybody just buying. We making money. Everybody living good, making money, throwing money. Everybody good. We eating, and it closed right here. Okay, all the momentum is going straight up in that candlestick. Everybody's buying. That's a big boy bullish candlestick. Okay, big boy bullish candlestick. Right here is the next one. Okay, that means with the do I need to zoom in some, y'all? Y'all can see. Y'all good? I need to zoom in some. Okay. All right. Good stuff. Good stuff. Good stuff. All right. Right here. Come on. All right. Right here. This candlestick. Remember, a green one opens right here. So this one opened right here. The next thing you know, everybody started to sell. Boom, everybody's selling. Sell, 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 sell. Next thing you know, everybody started to buy. Shot up, and it closed right here. That means the buyers are in control. So if this candlestick equals 5 minutes, remember like the time frames I've been showing you guys. So if this candlestick equals 5 minutes, over 5 minutes, this candlestick went all the way down here, then it came all the way back up here and closed right there. That's power. That means the buyers are in control. The buyers are in control, and the buyers are buying. They're buying, they're buying, they're buying. This one right here beside it, it's the exact same one. It just has a red head instead of a green head. Everything else is exactly the same though, almost. We know with the green head, what happens? Why does my thing keep doing that? I need to buy another computer. All right, right here. It opened it here up here at the top, right? It shot all the way down here again. Everybody started to sell, but next thing you know, boom, it shot back up here and it closed right here. Doesn't matter that it's green. The buyers are still in control because it opened at the top right here at $20. It shot down to $5 and it went all back up here and closed at $15. The buyers are in control still, not the sellers, the buyers. Don't get confused because it's a red head. The only reason it's a red head is because of this. It opened at 20 and it closed at 15. Okay, so it's still closed. That candlestick still closed less than what it opened. But the thing about it, it went all the way down to $5 and it came all the way back up to $15. Okay. Okay. The next one is the doji. Remember, I talked about these dojis, man. It opened right here at the top part of like a cross. The top part of the stick, it opened. It either went up or it went down first. We don't know, but say it went up first, then it went all the way down here. Everybody sold. Then by the time those 5 minutes closed, boom, it came back and closed right here again. That is a doji powerful candlestick. When you see these things, these are confirmations. These are things for you to think about. Think about buying a call. Okay. On the 5 minute candlestick, I use these on the 5 minute or above candlesticks. I do not use them on the 1 minute. I do not use them on the 2 minute, 3 minute, or 4 minute. Only 5 minutes and above. Okay. These are entry point candlesticks to buy calls. All right. All right. Entry point candlesticks to buy puts. Exact same thing, but it's just the opposite. You see this big boy. Listen, I love seeing this big boy. If I'm in a put and I see this big boy red candlestick, well, I'm bankhead bouncing around the house, nigga. We making money. Okay. I love to see it, man. I love to see it. It opened up here and it just went all the way down. It went all the way down here. Okay. Went all the way down here. All the way down. All right. Big boy red candlestick. I love to see it. Right here. We know it opened right here at the top. It when people start buying. Next thing you know, the sellers say, we selling. Boom. It went all the way back down here to the bottom. Okay. All the way back down into the bottom. Same thing for this one. The green one opens right here. People start buying. They living a good life. Then the sellers say, no, sir, no, ma'am. Boom. Came back down here and closed right here. Once again, the sellers are in control. Okay. Right here. The wick is at the bottom of the stick. The wick is at the bottom of the stick. The buyers start buying. Next thing you know, the sellers say, no, sir, no, ma'am. And boom, it came all the way down here. And it came back and closed at the same spot it opened. The doji candlesticks. This is chapter 3. Entry points, candlesticks. When you put now, let me stop right here. No matter of fact, let me keep going before we ask for a Q&A. Now, let me show it to you in real life. What did I just do? Okay, let me show it to you in real life. All right. Go back to my Tesla. Well, I'll show you this one first, right here. Okay, 5-minute candlestick. Decision-making time, right? Right here, it's decision-making. It's decision-making time right around here, right? You get a candlestick that opened right here. It went all the way down here. Then let me clear it so you guys can see it. So it opened right here, right? It went all the way down here. Then boom, it shot all the way up here, just like that, and closed right here. That's a big boy candlestick. The next one, the next 5-minute candlestick, right here, big boy candlestick. The next candlestick, big boy candlestick. You made some good money. Okay, you kind of see that. That's the big boy candlesticks. Okay, then you got your big boy red and coming on down. But we talking about entry point starting off. So let me go to Tesla. I just kind of saw that. Let me go back to my Tesla example. Tesla. Okay, let's use this example. Let's use the example we started with earlier. Look how we look how we're gonna put these 3 chapters together. All right. First thing first, rest in peace, Uncle Phil. Oh crap, it's stuck in my head. For real. I had to say the for real part. Sorry. Can't say half of it without saying it for real. Okay, so check me out. Let's see. All right. So you wake up in the morning, okay? You come in here, chapter 1, support and resistance. Okay, I have a stock that's on support. It's been on support, okay? Boom, boom. That's the first thing. Chapter 2, it's decision-making time. So I got the support level. I got its decision-making time. All morning it's been decision-making time. Okay? Boom. First thing I see in the morning when 9:30 come for the 5-minute candlestick, I see a big boy green candlestick. big boy green candlestick. On support. It's a big boy green candlestick. It's on support. It's at decision-making time. And my green line is starting to move up. The next thing I see is, look at this. Look at this right here. Look at this right here. So this first candlestick grabs my attention, right? Some people would get in on this one. I would probably get in on this one, but I would still tell you to wait for the next candlestick to come up. So probably wait another 5 minutes for this to come up. But this is one that grabs your attention. It starts to open up for you. And the next thing is this one right here. You see this one? This candlestick right here. What does this candlestick look like? The buyers are in control or the sellers are in control? Exactly. Did we not just show an example on the PowerPoint deck of a candlestick looking like this? And we said this is a potential buyer, a potential buy. Because look at it right here. Okay, right here. It opened right here. It shot all the way down here, but then boom, it shot all the way back up here and closed right here. The buyers are in control. That's a confirmation. Okay, I can get in. You see that? You got this candlestick is your big boy red. That's your setup candlestick. And then you got the next one, another powerful candlestick telling you to go ahead and get in. Okay. Entry points. That's how you know when to enter. Put it all together. I got a support. My candlesticks are on support right now. I got decision-making time. I got a big boy candlestick. And I got another powerful candlestick. That's three witnesses. The first witness is support, resistance. You got it marked. Second witness is what? I have decision-making opportunity time. And my green line is starting to go up. My third witness is I have the big boy candlestick and I have my confirmation candlestick. 3 witnesses right there. Chapter 1, chapter 2, and chapter 3, right there in front of your face. Do you guys get it? Do you guys see how this book is put together? And if you do this every single day, you will make money. Do you see now when you see me posting on Instagram, oh, I made $2,000, $3,000. I'm doing this every single day. Every single day. Okay? And you say, and somebody probably saying, well, Chris, you lost $3,000 too. Yeah, I did lose $3,000. I lost $3,000 a few times. And the reason why is because I go against this. Because I'm being impatient. I'm going ahead. While I said decision-making opportunity, I'm getting in at this candlestick and decision-making opportunity, thinking it's going to go down, but in actuality it's going up, and now I'm stuck in it. Okay? Now I'm stuck in it, right? I'm trying to get back. All right, let's go look at some more. Oh, wow, here go another one. Totally different day. Right here, let's look at this. Okay? Here's a put action. Decision-making opportunity time, chapter 1. We see it. I mean, support resistance. We see it right here, right? It's on support. Decision-making opportunity time. Boom, boom, boom. Next thing you know, we see it starts to bend down and boom, big boy red candlestick. You see big boy red candlesticks, you get in there. You get in there, okay? Boom, you in a put, get in there. Another big boy confirmation candlestick. Boom, you get in there. Yeah, this was June 3rd. This happened June 3rd. This actually happened Thursday. This is Thursday, right? I'm just going around. I'm just picking random stuff. I'm just picking random things on the stock. I haven't went by and looked at these or nothing. This is just random. It just happens on every stock, right? Boom, boom. They went down. Great time for puts. I mean, great time for puts. If you're using on puts right here, you make money. Okay? Boom, boom, puts. Look at the confirmation candlestick. Big boy. Confirmation candlesticks. Okay? On the 5 minute. All right? Let me see if I can find something else for you. You see this stuff right here? This is nothing is set in stone. This is just all just back and forth, back and forth. So I hate getting stuck, caught in that stuff like that. All right, here we go again. Take a look at this. Oh my gosh, this is beautiful. This is beautiful. Y'all, tell me, what is this? Look at this candlestick right here. This is the opening candlestick. Opening candlestick. Are the sellers in control or the buyers in control on this candlestick? Sellers, exactly, the sellers. And this is why it doesn't matter that it's green. Do not worry about the color. Okay, do not worry about the color when it comes to this doji stuff like this. Keep in mind, it opened up right here at the bottom. It opened up right here. It went all the way up. The buyers were in control because they went all the way up here, right? Then the seller said, no, sir, and boom, dropped it down here. And it closed right here. Okay, look at this body. The body of the candlestick is down at the bottom. That means if it's down at the bottom, that means what? That means it's the sellers are in control. Okay, that's the first candlestick. That's the first candlestick of the morning, the first 5-minute candlestick of the morning. And what's happening? It's decision-making opportunity. You keep putting the puzzle together. It's how can I get it? Okay, it's been decision-making opportunity all morning. So if you see this, you're just waiting. You're just being patient and waiting. It's been decision-making all morning long. You get a candlestick and it looks like this on the 5-minute. Next thing you know, what's this right here? Big boy red, right? A nice big boy red, right? Boom, you get another one of these candlesticks on the 5-minute where the sellers are in control. What are you waiting on? What are you about to do? And what is that green line starting to do? The green line is starting to bend down. What do? You buy puts. You buy puts. And what do we know when the dog runs away from the owner like it did? What do we know is going to happen eventually? Exactly. He's going to pull back. He's going to come back. He's going to come back. So this is what you do. You only keep him. This is very important. Put this down. You only buy when the candlestick is touching the green line. Do not buy when the dog is out in the field running around. You only buy when the dog is with the owner. Okay? Only buy when the dog is with the owner. All right? And the reason being, because if the dog is not with the owner, you know what's going to happen. The dog is going to come back to the owner. And when the dog is coming back to the owner, what is happening? You are losing money. Okay? You're losing money when the dog comes back to the owner. All right? That's beautiful. Look at this. Look how it looks. Look how beautiful that is. You see it? Look how beautiful this is. This is beautiful. This is a masterpiece. I wish I could speak Italian. Wish I could speak Italian. Wow, this is beautiful. This is a freaking masterpiece. But keep in mind, it looks so easy when it's already happened. But somebody said bellissimo, yes. But when it's actually going down, it's like, man, it's like freaking heart attacks, man. It's like, because you don't know. And when it's going down, this candle, like right now, these candlesticks are already closed. But in the midst of it, it's going up and down, up and down. That's why it's always good to know, okay, let me breathe. I understand what's happening. My green line is growing and it's going down. That's what I do know. I do know that my candlesticks are big boy red. That's what I do. That's chapter 3, okay? I do know that I don't see support or resistance right now. That's chapter 1. What I also know is if this thing keeps going down, it has to come back. So I've made good money right now. I can take my money right now and get out because I know eventually it has to pull back. Or I can say I'm going to wait for it to come back to the owner on the 5 minute. And once it does come back to the owner on the 5 minute, if it breaks through on the 5 minute, I'm getting out. But if it doesn't break through and it runs away again, I'm in the good. You have to have these things already in your head so you do not. Please go back and watch this replay and take in what I just said. So you do not get frantic, because it's something when you up $1,000, next thing you know, you only up $500. There's something in your mind. It's our mental thing tell us, oh crap, I just lost 500. No, you didn't lose 500. You still have made $500. Okay. All right. So that's how you have to play it. All right. That's how you have to play it. It's a beautiful thing, y'all. I'm telling you, this is a beautiful thing once you get the hang of it. It's going to take practice. When you get it and take the hang, it's a beautiful thing. So do everyone understand entry point calls and entry point puts? All right. So what I would tell everybody is, if you're trading like day trading and stuff, like have some of these things up on the wall. So you can say, okay, this is an entry point put, this is an entry point call. Because sometimes I have so many screens up that I get like, I really get so bogged down into my screen where I forget to say, okay, this is a powerful candlestick for a put, or this is a powerful candlestick for a call. Okay. All right. So chapter 1, support and resistance. Chapter 2, your EMAs, your EMAs. Yes, chapter 2, your EMAs and your decision-making time. Chapter 3, your candlesticks. So JT, let's stop right here right quick and let's have a Q&A on the candlesticks. See if anybody have any questions. Let me take you off mute.
All right, so someone wanted to know if you can give another example of getting out and getting in, just for clarification.
Yep, I can. So anybody, type in a stock right quick. Type in any stock you want me to do. I missed half of these. So I seen somebody says, all right, let's use Nike. I see Nike. NKE. All right, let's use this one. Okay. And keep in mind, this is last week, so there's a lot of puts last week. So and it's kind of up and down too. There's not really any major trends this last week. Not any major trends not any major trends. So you gotta see it's gonna go up and down. Okay. So let's use this one for example. When do you get out? I don't know why my thing is like moving so slow. All right. So for example, we got some decision-making action here. It's kind of choppy, but it's decision-making opportunity. The green line is getting close to the yellow line, and then boom, big boy red. That's one sign to get in, right? Another big boy red, another big boy red, another big boy red. The dog has ran away from its owner. Okay, now it's coming back. It's coming back. It came back. It went down some more. Came back. Went down some more. Went down some more. Right, it ran away again. Right now, boom. When do we get out? It's coming back. Now right now the dog is walking with the owner. The dog is walking with the owner. Boom, the dog runs the opposite way. That's when you get out. Once that candlestick breaks your non-EMA, your green line, that's when you get out and sell, because it's over. It's over for me at that moment, right? Because as you can see, this thing went all the way back up here. It went from here up to here. You're losing profits, okay? You're losing your money. Okay, so that's when you get out. You get out when you get out once your candlesticks or once the dog runs the opposite way. So if it was going down north, once this dog starts to go south, going south, it starts to go south, boom, went south. This is when you sell right here. Okay. Also, entry points. The entry point candlesticks only are good when you're at a decision point. That's why decision-making time. That's why I say they're called entry point candlesticks. They're only good when you're at a decision-making opportunity, okay? John Book, listen, John, I had to take calculus and I couldn't pass calculus in my freshman in college. I went to my senior year putting calculus off, and I went to the York Technical College to pass calculus. Calculus is hard as crap. But yeah, so which means I'm not a genius. So that means anyone can do this. All right, what's another stock? No, I mean, what's the next, another question? Oh, Nikki N, great question. Beautiful question, Nikki. Beautiful question. You said, would you be able to get in since the dog has already ran away from the owner? Great question, Nikki. Now, this is what you got to think about. I'm going to show this to you on the 2-minute time frame as well. Okay, that's a beautiful question. That's the best question I ever heard a day in my life. It really is, Nikki. I'm not being funny. It really is. All right. So you see how this big boy red candlestick happened, right? So that's your first one, right? This is your first one. The next one is right here. This is your confirmation one to enter. So you are actually entering on this candlestick, right? You're entering on this candlestick, right? And this candlestick is close to the owner. Okay. But look at this on the 2-minute. 6-4. This is why I have multiple screens up, okay? This is how it looked on a 2-minute. It looks very different, right? So this is why I have the 5-minute and the 2-minute up at the same time. So I'm entering right around, I can enter, I see this happen right here. I see this happen, I see it starting to come down. Boom, this comes down and it happens right here, right? Boom, all this happens. Now I can enter in somewhere on this candlestick, or I see this happen right here, right? I don't want to enter right here on, get my drawing tool. I don't want to enter right here on this candlestick because it's kind of far away, but I can enter somewhere in on this candlestick, okay? And then it comes back, and when it comes back to the owner, it goes back, it started to go back down. I really want to get in somewhere around here. Okay, and I want to ride this train all the way down here. All right, that's kind of how you look at it. But to your point, that's why I have the 5-minute and the 2-minute. The 5-minute told me one story, and the 2-minute told me the other story. Okay. All right, any more questions before we move over?
What's the reason why you wouldn't get in on a second candlestick?
This candlestick right here, because I got a big boy red one right here, right? A big boy red one right here. Then I have another red, right? I have this red one right here, but after a big boy red one, that means that you're away from the EMA. The dog has ran away. A big boy red candlestick means the dog has already ran away, right? So you want to wait till he come back a little bit closer before getting in, because you may get in right here and the dog comes right back and run the opposite way. You see what I'm saying? You want to buy when the dog is with the owner and you see that he's about to run away again. Okay, so right here, boom, we don't know what's about to happen. We just know the dog is making his way back to the owner. And this dog can go this way or he can go this way. We don't know yet. And we do not want to get caught in the crossfire of it going that way. Okay? Matter of fact, let me see if I can find one of those right quick. Where the dog goes the opposite way. Okay, here you go. Beautiful, 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 beautiful. Here we go. All right. Yeah, my wife had to put up with this, like, my wife had to put up with this forever. Like every day she had to put up with me acting like this. Okay. Right here. Small, slight decision-making opportunity right here on the 2 minute. No, keep in mind, we use the 5 minute. I'm just using this for example. All right. We use the 5 minute, but this is the 2 minute right here. Boom. Decision-making opportunity comes. Big boy red candlestick. Big boy red candlestick. Right. It's far away from the owner. Don't get in right here because what could possibly happen is far away from the owner. We need to see what happens when it comes back to the owner. It came here, another small red one. Then we got a green one. Then we got a green one right here. Then we got another green one. The dog is coming back to the owner. The dog is coming back to the owner now. Boom. The dog is with the owner right now. Right? The dog is with the owner right now. He's walking with the owner. He's walking with the owner. He's walking with the owner. The dog said, I'm going up north. Screw going down south. There's no more birds. There's no more balls over there. But you stuck in a put because you bought far away from the owner. And look what it happens. Boom. Comes back and boom. You missed this decision-making opportunity right here because you were stuck in this right here, hoping and pleading and praying that this thing went back down. Does that make sense, y'all? Okay, that's why patience and discipline, patience and discipline, patience and discipline, patience and discipline. Okay. All right. Any other questions, JT?
You're good for now.
All right. Now, the last chapter, not the actual last chapter, but the next chapter, chapter 4, volume. Let me add my volume back in here. Also, everybody, I made a video for you guys so you can know how to do this, what I'm doing right now. So I made a tutorial for you. And that tutorial is going to show you all this stuff, show you how to maneuver through Thinkorswim TD Ameritrade. Okay? It's going to show you how to move through, how to maneuver through TD Ameritrade. The little button, all these buttons right here, I told you what they meant. I showed you how to go to here, drawing tools, and create your support and resistance lines. I told you what all this stuff, monitor trade, active trader, all that stuff mean, right? I showed it to you like a 20-minute video, so you have that, okay? So I don't want you to, so you guys won't be confused or lost, okay? All right. Next thing is volume, okay? And I want to go to Tesla because Tesla be having some stupid volume, all right? Okay. So right here, volume. Right here, does everyone see? Let's see. Robert, yes, it'll be out tomorrow morning. You have that tomorrow morning. Yes, you have 2 videos tomorrow morning. I'm gonna touch on that in a little bit. Okay. All right. Come on. I'm gonna have to go buy another computer, y'all. This thing moving kind of slow. Okay, here we go. You see this gold line right here that I'm tracing over? I don't know if y'all can see it, but you see that gold line that I'm tracing over right here? See this gold? That's your volume average line, okay? That's your volume average line. So whenever you see a volume bar, this red bar right here and this green bar, these are volume bars, okay? It tells you yours look white. Yeah, it can be a little bit. It's like goldish white. Yeah, it is. But you got your bars, yes. So you have volume bars, the green volume bar and the red volume bar. Anytime your volume bar is above that average line, that volume average, that means it is high volume. When you have high volume, that means there's a lot of people buying and selling. Okay, a lot of people buying and selling. Okay, and anytime you get into a trade, you want to get into a trade where there's a lot of volume. Okay, a lot of volume. You don't want to get into a trade when you see that the volume is low. You don't want to trade those stocks because not a lot of people are in those trades, so not a lot of price action is going to happen. So you want to make sure that your volume is above the volume average. Okay, that's what I focus on, making sure it's above the volume average. Okay, like you will see right here. So for example, think about this. Take a look at this. You see all of this volume, right? Everything is above the average. And look at what happens. It came from here all the way down here, went up here, consolidated, went down, and so on, right? Then more volume happened. Look at this volume. Volume is going up, it's going up, it's going up, it's going up. All that volume, that's money, right? But take a look at here. Look what happens when the volume goes beneath the average line. Look at the width of the candlesticks. It goes from the ceiling to the floor. The ceiling to the floor is straight consolidation. Consolidation is the worst thing you can possibly be in because it drives you freaking crazy. Okay, so what you want to do is you do not want to get into a stop when the volume is below the volume average, because you're only consolidating. When you're consolidating, you're not doing anything but in the same place over and 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 over. That's it. Nothing's happening. You're not going to make much money. Okay, if anything, you're going to lose money because you're going to try to force something. Okay. And then the main thing about it is this though. And yes, Sean, when you see that consolidation happening, you just want to wait it out because it's decision-making opportunity, right? So now it's perfect. And Sean, you hit it on the head. Now you found your consolidation, which is going to equal to a decision-making opportunity. And I don't know what's going to happen with this stock. Let's see what's going to happen. You found your consolidation. It's decision-making opportunity now, and you got consolidation. The next thing you want to start seeing is the volume pick up. You start look at this. It's below the average. You see something building. This was above average. It kind of went back down. You start seeing your green line going up. Your green line going up from decision-making opportunity. The green line going up. And then you start to see what? Go back here. You start to seeing it go up, going up, going up. Got some more volume, but it's still kind of playing around with you, right? Still kind of playing around. I don't know why it's blue like that. I think it's just my screen. It's kind of, the volume is kind of increasing though, because you're starting to see movement. You're starting to see movement. Okay, and it's still kind of decision-making opportunity too. So it's still decision-making opportunity. Nothing major has happened yet, right? Still decision-making opportunity. And then next thing you know, look what happens. Look at that volume pickup right here. The volume went from right here being below average, to boom, big boy volume. Look at that volume. Just like that. Yep, somebody said it. They said lunchtime activity. Exactly. Wall Street went to lunch and they came back for lunch. And Wall Street, for some strange reason, said, listen, no, we're going to sell. So, hey, everybody sell. Okay, everybody hit the sell button. That's what I be feeling like. I be feeling like Wall Street be like, okay, I'm going to just hit the sell button today. Hey, everybody sell. Let's all team up to sell. That's what it seemed like to me. Hey, everybody, let's just buy a whole bunch of stocks today. Let's buy. But at 1:30, everybody, at 1:31, we're all going to hit the sell button. Everybody just started to sell. I'm like, man, this is crazy. You see what I'm saying? But look how that volume picked up. It went from nothing. Consolidation volume, nothing. Consolidation volume, nothing. But you found a decision-making opportunity into this. Straight big boy red candlesticks, straight big boy volume, and the whole story goes along. And once you got into that stop, the only thing you're doing now is playing the dog walking the owner game. Okay? You guys kind of understand volume some? Talk to me, you good? Want me to go over volume again? Or are we good? If you want me to go over volume again, say go over. Say go over, go over, go over. One more time. Okay, go over. One more time. Let's go. All right. Once again, volume. Let me go to 5-minute candlestick. 5-minute time frame. Okay. So volume. Anytime this gold line right here with the volume, the gold line with the volume, that's your volume average. You want your volume these volume bars down here to be above the gold line. You want them to be above the gold line. Okay? You want them to be above the gold line, above the gold line, above the gold line. Okay? That means there's a lot of people buying and selling, a lot of price action. Okay? A lot of buying and selling is going on, a lot of price action. All right? Now, when it comes beneath or below, come on, slow. When it comes below the bars, this is more so consolidation. Okay, it's consolidation. And when you have consolidation, it's forming a decision-making time. But you don't want to trade right here. You don't want to trade until the volume goes back above the volume average, or it starts to pick up some. Okay, right here we see it's picking up some, it's picking up some, it's picking up some, it's picking up some. It didn't break the volume average, but some people started to buy. Okay, some people definitely started to buy. Okay, the volume definitely picked up some, but it's still, for the overall, it's still beneath, still beneath, still beneath, still beneath. Okay, and then it kind of closed off at the end. Okay, so you really want to buy when that volume is above. You can make money when the volume is below, but it has to be below and it has to be high, like kind of tall, like pressing the issue, like kind of pressing the volume average. You just don't want to have it right here where it's just sitting, right here. Where it's just sitting right here. So that's just sitting below the average. Like, you don't want to get in and touch that. Okay, you want to start seeing that volume pick up. Okay, and honestly, that's basically the volume. The main thing with volume is you want it to be above the average line. Okay, that's going to give you the most bang for your buck. When you see bigger candlesticks, like see how big this candlestick is, that means there's more volume going on. When you start seeing these small candlesticks like this, that means there's not a lot of buying and selling happening. So it's low volume. Big candlesticks, a lot of selling and buying going on. Small candlesticks, not a lot of buying and selling going on. So that's low volume. If you see a whole bunch of small candlesticks, you know there's not a lot of buying and selling going on, but a potential decision-making time is coming. Okay? All right. JT, let's do a quick Q&A with the volume.
Is it wise to use these charts on TD Ameritrade to take trades on Robinhood or Webull? Yep.
Yes. So you can use these charts and the support and resistance lines and everything I'm showing you on any platform. Okay, on any platform you can use it.
So every time the volume is below the average line, it's about to be a decision-making time coming up? Not
every time, no. Because you may have a candlestick that just has low volume, but the next one is big boy volume. Once you will see the consolidation happening, right? Like you will see a long strand of just consolidation up and down, up and down, up and down in the same spot. And it's just small candlesticks. And you will see that those volume bars reflecting that. And the lines will tell you when it's decision-making opportunity. Don't guess when decision-making opportunity time is. The lines will tell you. Okay, they'll be right beside each other. They're close to each other.
How much does volume matter in swing trading?
Good question. So I would say it definitely matters in swing trading, but to the point it's more important in day trading than swing trading, because in swing trading you may be holding it for 2 to 3 weeks, so you may have 2 or 3 days where there's low volume. right? But it doesn't, it's not really affecting you that much because you're in it for a good 3 to 4 weeks. But if you're day trading, you can't sit there for 2 hours or 3 hours and have no volume because it's just taking time off the clock because you don't have much time. So it's more important in day trading than swing trading. But at the same time with swing trading, you just want to make sure it does have some volume, that people are buying and selling the stock. Good, that's a great question.
All right, Chris, will you tell your personal preference when you think the best, more volume in the market during what hours?
9:30 to 11 and 2 to 4. 9:30 to 11 is a lot of volume. That's why I try to get a lot of damage done, right? And then from that 11:30 to 12 to 1 o'clock, it's like sometimes you can get some good runs, but for the most part, it's dead. But that 2:30 to 4 o'clock, it normally picks up. A lot of volume.
All right, and someone asked,
Eastern Standard Time. Lakeisha, Eastern Standard Time. So in other words, the first 2 hours of the trading day and the last 2 hours of the trading day are the best times to trade, in my opinion. Sergeant T, go ahead.
oh, you're good. Someone was asking, do you prefer the day or swing trade?
I have no preference. Whichever one gives me the opportunity. I only swing trade. I'm not gonna say I only swing trade, but for the most part, I swing trade when I see that a stock is at a particular key support level. Like for example, Tesla, if Tesla goes back to 550, for some reason it goes to 550, 560, I'm going to be looking to open up a call because that's a key level of support for Tesla. Okay. If Apple goes to 120 to 118, I'm looking to open up a call because that's a key level of support for Apple. Okay. So that's when I do most of my swing trades. Sometimes I may swing trade Amazon overnight just because I see that it was some bad news that happened throughout the day. And so the stock market is kind of going down. I'll swing trade something to hold it for one day. But if I'm in Apple and Apple's at 118, 119, 120, I'm buying a 3-week, 4-week expiration day with Apple and I'm letting it ride.
All right, Chris, this one is not about the volume, but there's a couple questions about it.
Okay.
The 200, what's the red line for?
So the red line is the 200 moving average, okay? 200 exponential moving average. It's the same thing as the green and the yellow line. But what you do is whenever that green line and the yellow line and the red line is close, that's even more. That's even more like on a 4-hour time frame. That means it's definitely about to make some money because it's another run about to happen. But the grid line is saying, okay, the last 200 candlestick average. So for example, if I go here on Tesla, this is delaying everything I do on my computer. Okay. If I go here to the 4-hour candle, the 4-hour chart, and I see that, let's see if I can get it better. I see that the red line is beneath the green and yellow line. That means we're on an upward trend. Okay, we're on an upward trend. If I see the green and yellow line are beneath the red line, that means we're on a downward trend. So overall, this stock has been on a downward trend. And that's what the red line is telling me, that we're on a downward trend. So right now with Tesla, at this very moment, Tesla is on a downward trend as it relates to overall over the past 180 days. At this moment, it's at a downward trend.
I think you're good, Chris.
All right, perfect, good stuff. So that's chapter 1. Chapter 2. So chapter 1, support and resistance. Chapter 2, your EMAs. EMAs where your moving averages and your DMT, decision-making time. Chapter 3 is your candlesticks. Chapter 4 is your volume. So right there, you have chapter 1, chapter 2, chapter 3, and chapter 4. You tie all those together and you make a beautiful masterpiece. And we're going to do some more of that tomorrow, right? Chapter 5 is your risk management. Chapter 5 is your risk management. And we're going to jump directly into that tomorrow, chapter 5. And we're going to work on risk management. And then tomorrow, we're also going to do buying and selling. So what I want everybody to do tonight, if you have not downloaded Thinkorswim, if you have not downloaded Thinkorswim onto your desktop, please download Thinkorswim onto your desktop. Okay, go back and look at the TD Ameritrade setup. If you have, now keep in mind, when I say download it, I mean you go to TD Ameritrade, click on platform trade, go to platforms, and let it download onto your desktop, not the web version. Okay, not the web version. If you have a Chromebook, anybody in here if you have a Chromebook, type in CB. I want to see how many people we got Chromebooks in here. If you're using a Chromebook, type in CB. Okay, so I'm going to send out a tutorial tonight, right? I'm sending out a tutorial tonight, and that tutorial is going to show you how to use a Chromebook, okay, with Thinkorswim. You have to go to the App Store, okay? Go to the app. This is for Chromebook and iPad. Go to the App Store, download Thinkorswim to your Chromebook or iPad, and I'm going to send you a video tomorrow morning on how to set it up so you can get your EMA lines like mine, the green one and the yellow one. It's going to show you how to get all that stuff, okay? I'm going to show you how to get all that stuff. All right, that's for my Chromebook users. If you have a MacBook, or if you have a like a regular Windows desktop like I have, I'm going to send you a video tomorrow. That video is going to set up your screen to look like mine. Only thing you have to do is this. It's very simple. I'm going to send you a link to copy, right? I'm going to send you a link to copy, and you're going to come up here to set up, open shared workspace, and you're going to copy that link in here. In the video I send you, it's going to take you step by step how to do it. You're going to put it in here, and you're going to hit import. And once you hit, you're going to click here, hit import. And once you do it, your screen is going to look exactly like mine. It's going to look just like this, right? Where it's going to look, basically it's going to look just like my screen, okay? That's for MacBook users and for Windows users. Please, 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 please have that done before class tomorrow and make it run a lot smoother. Also, on people with MacBooks, you see right here it says setup. On Windows, anybody who has a Windows regular desktop like myself, yours will say setup, okay? On a MacBook, it's not going to say setup. It's going to say something else. I'm not sure exactly what it says on MacBook. Matter of fact, somebody with a MacBook right now, at the top, go to setup and go up to the top right and see where it says, open this part up right here. And what does it tell you up here? Like, what options does it give you? I'm going to take you off mute so you can talk freely. And whoever has a MacBook right now, take yourself off mute and talk freely. If you have a Mac.
I got an iMac, so
that's the MacBook?
no, the iMac, the desktop.
Oh, it's a desktop. Okay.
Already downloaded.
MacBook says setup. It says setup.
Oh, so MacBook does say setup at the top right.
Yeah, right next to the chat and support.
Yep. Okay, cool.
Yeah, it
so
says setup.
When you hit setup, you can hit open shared item as well. Does it say open shared item?
Yes, it does.
Yeah.
Okay, perfect. Okay, that's good. That's perfect. Also, when you hit this open shared item, the thing that you copy, you can't right click and paste for Windows. You have to Control V for Windows. And I think for MacBook, it's like Command Control V or something like that.
It's Command V.
Command V. So you got to use Command V. But I'm going to send you this in the video tomorrow. Have this set up so when we start to buy and sell tomorrow, you will be able to just jump right into buying and selling. Okay. All right. Let me cancel this out. Let me stop sharing. All right. So I hope everyone is still feeling comfortable and confident. I hope I didn't overwhelm you, but please, 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 yes, we will go over the Greeks tomorrow. Okay, we will go over the Greeks tomorrow. Tomorrow we're going to go over the buying and selling, where you buy calls, where you buy puts. We're going to go over risk management, and we're going to close that book on risk management. Then we're going to do some buying and selling on demand, all that stuff tomorrow. Okay, but it is very important. Come to class with the with everything already set up, okay? Any final questions before we time out for the night?
Should we put some money in the account or no?
I can show you how to do it. Right now, you don't have to put any money in the account because right now you will be doing paper trading starting off, but I will also show you how to put money in the account, yes.
Okay, awesome.
Yep. All right, good people. Listen, I appreciate you. Hold on, Reggie P. I think Reggie P had a question.
Yes, I do. Yes, I'm here. I just wanted to know when the recordings would be available.
So did you get the recording from today? Yeah, I mean yesterday.
No, I didn't. Yes, I'm here. No, I didn't.
Okay, so I sent it out. I sent it out this morning at 11.
I sent it out.
So if you did not receive the recording this morning, please send me an email.
This morning, please send me an email.
Send me an email, and I will. Let me mute everybody.
And I will. Let me mute everybody.
I have a question. In case you have money in their account.
All right. So if you did not receive the day one replay recording, please send me an email saying you did not receive it, and I'll forward it over to you. I don't know why you didn't receive it, but I sent it over to everybody. Sometimes things get messed up in it, emails. Also, day two recording, I will be sending that out at 11 a.m. tomorrow. You will also get the 2 other videos that I was telling you about as well. Okay. And like I say, just come to class with those things done. Any other questions?
Yeah, I have a question. When you download the Thinkorswim, it asks you, do you want to select the TD Ameritrade or in 3 other versions? Which one do you select?
You doing it on the Windows or MacBook?
MacBook.
Good question. MacBook people, how did you download yours?
No, I can download it. It's just that no, actually, I'm sorry. I'm using a PC. It just asked me to select 4 different versions once I download it and try to like open it up.
I'm not sure, but I would just stick with TD. I would stick with TD and see how that works out. I'm not familiar with that question though, but stick with TD. If you have any issues, let me know.
Okay.
Okay. Yes. Also, remember, Chromebook users, I'm going to send you a video as well. How to set up your Chromebook. Remember, go to the App Store. Go to the App Store, not the web version. Do not. If you guys have a www on the top of your screen while you have Thinkorswim up, you are on the web version. It's not going to work for us. Okay. You have to download the app out of the Play Store on Chromebook, and then the video will show you how to set up your screen so it can look like mine. Okay.
Chris.
Mm-hmm.
I have a question. I won't be able to make it Sunday because I had something come up. Will I still be able to go back and go through everything?
Yeah.
Okay.
You have every
that you'll be showing tomorrow as far as the trading part. I'll still be okay with it.
Yeah, yes. You have everything you need to do. The record is going to show you everything, and you have everything you need to do. And like I said, also tomorrow is the last day, but tomorrow is actually the beginning because Monday is day 1 of the Discord. Okay, so that's day 1 of the Discord, and then we'll probably have a Q&A. We'll probably have another Q&A set. We have another session just like this we had today, like we have with the class next week as well. Probably maybe like Tuesday or Wednesday next week. We'll have another QA around probably like 8-9 p.m. next week, and we just gonna have a live whole bunch of Q&As, man. Like we're gonna beat everything into your head till you guys get it. Okay, you're gonna have a lot of support. Okay.
And then how long are the recordings up?
Oh, the recordings are unlimited. You have them for as long as you need them for. Like I'm sending them directly to you, and you can just this for your own personal use, whatever you want to do. Yep.
Okay.
Yep.
For Windows users and not on Ameritrade, how do we download the Thinkorswim?
So this is the thing about it. If you're not using TD Ameritrade, you have to use whatever platform your brokerage use. So what I would do is whatever platform your brokerage use, download that platform, but tomorrow try to familiarize yourself with their platform. So go look at some tutorials that may be out online and just learn how to set up your studies, your EMAs and things of that nature. Okay. That's all you have to do. And once you learn how to do that, everything else that we've taught in the class will be easy for you.
All right.
Okay. All right, good people. Well, thank you everyone for another good evening. Yeah, man, listen, this class is so respectful, man. I really appreciate how respectful you are as far as not cutting people off and when people ask questions and you're patient. So I really appreciate every last one of you guys. And honestly, I can't wait to see us start making some money together. But I will see you tomorrow. And if you have any questions in the meantime, shoot me an email. And also shoot me an email. If you got my number, shoot me a text message, okay? And Candace, I think Candace Jackson, shoot me your Cash App, and whoever else won the $50 tonight, shoot me your Cash App as well. You can send it to me on Instagram if you don't mind. All right, y'all have a good night. Thank you.
Thank you. Good night.
All right.
Thank
All right,
you.
cool, brother. Thanks, everybody.
Have a good one.
Thank you.
Thank you.
Peace.
Thank you.